Last night I watched the snow fall slow, while my portfolio tanked like a sleigh with no reindeer below. And I swear those bells on Main Street sounded like margin calls ringing my name with a candy cane stripe paid me. I wrapped my vices in tinsel, drank eggnog till my conscience went numb. Texted 3 exes, Merry Christmas, I'm different, but I'm probably not. I'm just broken dumb. I keep shorting my peace of mind, longing my regrets, hedging the rest. My therapist says I'm spiritually oversold. Yeah, well, buddy, join the line, we're all depressed. Yeah, deck the charts with blood and folly. Fa la 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 la, I'm losing slowly.
Every candle's melting thin.
Even Christmas can't save my discipline. Hang the stockings, hide my shame, wrap my losses in candy cane. If joy were liquid, I'd go long, but I keep betting wrong, betting wrong, betting wrong. Whoa. Rudolph's nose ain't the only thing glowing red. Check my PO chart and the trail of bad decisions I bled. I've kissed more bottles, friends and lovers, lit more wine, scented candles and bars on the covers. And every Christmas wish is another gamble I lose. Wrapped in ribbon, nobody asked me to choose. I keep gift wrapping all my problems, stacking them under a tree I can't afford. And the angel on top keeps whispering, buddy, this ain't what Santa meant by Jingle bells, my credit fell. Snow drifts on my overdraft hell. Candy coated self-destruction. Santa's laying a chain reaction. Holiday cheer in a lavish squeeze. Stocking stuffers full of fees. Christmas over a tradable call. I'd strike too high and lose it all. Give me a shovel, watch me dig. A grave in the snow for every bit. Dream my margin loan to hell, just to climb back out and oversell. I'm only brave till the charts turn red. Only sober till I'm back in bed. Only festive when I'm half dead. Baby, that's my Christmas spirit. Let the carolers sing my credit score. It drops a note with every door. Holly ivy tangled charts. I stitch my future out of parts. If Santa trades in futures too, he'll look at me and say you're screwed. But bless the bells and take the fall. I'll rise again after Christmas
Oh, brother, oh, brother, oh, brother.
Good morning, and welcome back to another episode of the Kohrs Show, where it is a beautiful Friday, December the 18th, aka Payday Friday. It is all going down today. Now, I know many of you simpletons who believe in the linear nature of time are going to pop off in chat and be like, but Matt, it's Thursday. We're getting all the inflation numbers today. It's Thursday. You're wrong. And I don't care. It is Friday. It is, in fact, Payday Friday, and either get with the operation or get going. But, folks, we are starting early today, not only to get ready for Payday Friday, but also we're about to get a lot of important inflation numbers. So that's why we're starting early, because in a mere 3-4 minutes, that information will be coming out. Massively important. So we're going to be checking that out. Let me set the scene for you there from that point. Make sure you get locked in for the Payday Friday, like, retweet, follow. We're not giving away 5 or 10. We're giving away 15 prop accounts. And you know what? Because I'm in the giving mood, let's up the winnings for also the fastest marble racer in all the land. So we're going to make it fun today. We're going to have a good show today. We're going to make some money. We're going to have a good time. And we're going to see how it's all going, especially because I am wearing my most lucky of all shirts. Make sure you get on your own Buffalo shirt today. We need to stack the deck in our favor, if you will. So on that note, I am very rapidly running out of time. So let me get you guys set up for today. ECB holds rates steady in last gathering of 2025, if you say so. Stock futures rise as inflation report looms. Yes, that is what we are waiting for today. November's inflation report is the first to be released after the shutdown. Here's what to expect. Well, you can see we already got some things this morning at 8:15, a couple minutes ago, almost 15 minutes ago. We got the decision from the ECB. That was anticipated. The ECB, the European Central Bank, keeping rates steady. A little bit before that, the Bank of England, the BOE, another central bank, they ended up cutting their rates by 25 bips. And now this is all setting us up for 8:30. In about 2 minutes, we are getting the CPI, the Consumer Price Index. So these reports are all pretty important because it kind of does set the stage for the next inflation report tomorrow, the PCE. But as that first article alluded to, this is the first one we're getting, the major one since the government shutdown. So yes, this is going to be an important one, especially when you kind of appreciate the overall context that in the past 4 trading sessions, the market has been nothing but hit, kind of nothing, and then hit again. So is this a fake out breakdown like we saw before? Are we bouncing off the 50 EMA? Or is this a legit breakdown? Well, if you ask me, it's all about to be decided by these reports. And then I do want to remind you, tomorrow, Friday number 2. So right here, we're at Friday number 1, Friday, December the 18th. And then tomorrow we have another Friday, December the 19th. We have another inflation report, the PCE report, existing home sales. And on top of that, the BOJ, the Bank of Japan, is going to be making some important decisions. So that's why we're starting early. Obviously, with respect to the economy and monetary policy, this is all very important. With respect to the technicals of where the market's at right now, if you look at SPX, if you look at NDX, they're all on the precipice of what in the world is going on. Big decisions being made. So if you ask me, this is going to end up being a very important, I guess, flip of the coin. As I alluded to before, the Bank of England cuts interest rates in welcome Christmas boost for consumers. So the ECB, the European Central Bank, keeping it steady. Here in the U.S., 25 bips rate cut. In England, the BOE, also a 25 bips rate cut. I should let you know at 8:45, we're also going to be getting the, I guess, live conference from the ECB. So that's going to be another thing we should be paying attention to. But first things first, we have less than 1 minute, and our boy Rickson Tilly should be coming on. So let me make sure the volume is where it should be. All right.
We are just seconds away.
Here we go. Currently, SPY trading at 470, 674 and some change. What's everyone's best guess? You have seconds to guess. Are we going to get saved, or is Santa Claus not coming to town? God, I really hope you put on your lucky shirts today. We're going to need this one.
And NASDAQ indicated higher by 214. Take a look at Treasuries.
Up and away. Look at that pop. Look at that pop. All right. I knew you guys. I knew I could count on you guys to put on your lucky shirt today. It's giving it back rather quickly.
Have the numbers for us when they do break, and it is an unorthodox.
Where's our boy Rick? Get Rick on the screen.
For 2 straight
Give me
months.
Rick or give me death. Look at that pop. We might have been saved, folks.
But we'll be glad to get some delayed data
Is this Rick?
nonetheless.
Yeah, here we go. We got jobless claims just coming straight across here, falling to 224 in the week of December 13th from 237. That was revised up from
Rick?
236, so not a big deal. Let's see, 4-week average rising to
We popped
217 because remember we had that big low number from Thanksgiving, so
up
that
to
was a seasonal
677.
problem. I think.
$3
Continued
pop,
claim rising to
pulling back
1.897
about
in the week of
2/3,
December 6th.
but holding as of now.
That's below consensus, and it is up from 1.83 the prior week, but still not at 1.9%. Now, the number of the morning, the CPI, maybe coming in a little bit better than expected. 2.7%, a little light here. I'm just reading the headlines here. Year over year, 2.7. Ex-food and energy core, 2.6. So 0.4 off. That is a very good number here. And it really, I have not looked at the internals. I'll look at them now, but it suggests that the internals
We're up for good
are
reason
as well. Let's see. Year over
Initial
year,
jobless
over the last 12
claims
months,
at
there is
expectation,
no
inflation.
month to month, but some guys will be able to calculate. Seasonally adjusted index for all items less food and energy rose
Lower than expected.
0.2% over the 2 months.
Is Rick not working
correct my
today?
math here, Michael Santoli, but 0.2 divided by 2 is 0.1.
Yeah.
So therefore, that's a very, very low monthly rate here. The index for shelter increase.
This is
so you did
way
get a really
lower than
nice,
expected.
Decline in
Like
shelter,
way
which was
lower than
0.2.
expected.
So that was 0.1 per month. Energy
I
index
understand the pop
rising
for sure. I'm
1.1%,
curious if it's going to
over the
keep
same
fighting back
2-month period.
up.
And what's good about that is energy prices have come off.
That's right.
And so the December numbers are going to pick up a better number here. Let's see. The all items
We are
index.
back above the 50 EMA. This might be the fake out
I'm
breakdown.
Go and find right away here. All items less food and energy. That's the core, 2.6. So that's a very good number. With a big rise in like gas services up 9.1%,
Wow.
electricity up 6.9%.
The Bulls might have just gotten
rate.
very,
I don't
very
have,
lucky.
A month to month on that. Shelter up 3% year over year. I'm looking for goods, but I got to go to another table for that. Why don't you? You have some guests there.
We do,
and I'll fill in
who
the
are they
gaps
bringing
in my
on
knowledge
today?
over that period of time.
And markets did get a little bit of a bid. The equities did extend their gains. As you see, the S&P up now about 40 points, and the Dow higher by 175 versus 100 from before those numbers. Let's bring in our panel. Joining us now, Brookings Institution Economic Studies Senior Fellow Wendy Edelberg and American Institute for Economic Research Monetary Economics Managing Director Lydia Mashburn-Newman. Welcome to you both. Wendy, I mean, I know you haven't kind of been able to dig into the guts of this report, but it seems like a pretty benign reading. How do you feel about it?
Benign, I would argue, actually
it's
bullish.
frustrating because they haven't even posted the information that I would need to really.
Rick doesn't work on Fridays.
parse all of this, given
he got us again.
the confusing way they've displayed the information. But the important number is the year-over-year change in the prices of core goods, and that was 1.4%. And that may not sound like a lot, but this is a category that in normal times has negative inflation all the time. And this is where we're seeing tariffs. So I think this is the category where we know that tariffs are having, in some ways, the absolutely expected effect on inflation.
So for that subcomponent of inflation where you would be able to isolate perhaps the tariff effect, maybe we are seeing it, although, Lydia, I guess not necessarily feeding into, by this number, a broader lift in CPI.
The headline number definitely seems to be a step in the right direction, coming in at 2.7 year over year. We should keep in mind, though, that that's on some higher inflation numbers that we saw with the Federal Reserve's last rate hike cycle starting at the end of 2024. So we would expect these upcoming readings from November and then December and January and February to look a little bit better because the relative year-ago comparison was also relatively high. But as Wendy was saying, those goods prices are definitely an indicator of inflation showing up in tariffs showing up in inflation. And but we still need to keep an eye out on services
Qs
inflation.
are doing
While
even
we
better.
Have seen housing come down a little bit.
The Qs
services
are
still
holding
elevated,
way
and
better.
that is a monetary issue. That is
605.75
related to the Fed's monetary policy. And so we do still have some pent-up price pressures
So the
from
Nasdaq
both the Fed's
seeing a
last
nice
rate cutting
recovery this
cycle
morning.
last year, and even some overhang or maybe hangover from their post-COVID policies.
Wendy, given that we are able
Nvidia
to identify
Broadcom pop,
perhaps this tariff
Tesla
affecting
pop,
core goods, what does it mean on a
Palantir pop,
forward-going basis? Because
Apple,
you do hear
probably
some
the
folks who are
least,
kind of
Google pop,
inflation
Meta
doves,
pop,
who are essentially
Oracle
saying
pop,
we're going to
AMD.
anniversary the initial tariff effects, and it kind of will come out in the wash. So what's your expectation for how inflation tracks from here?
I don't think we've seen the last of the
She's
tariff
Rick's
effect
brother?
by
No
any
way.
stretch. I think we're only seeing a modest part of it so far for a whole bunch of reasons. One of which is that we, firms hoarded inventory ahead of the tariffs and are probably still
We got
working
small
through
cap
that. So I think
up 1%, Q's up 1.1, SPY up 0.6. So the Q's are, what's been dragging us down is actually recovering the best right now.
By my reading, the labor market is just a tick soft. I think that the monthly payroll employment gains of around 20,000 a month are just slightly below what my estimate is of the break even, given what I think immigration is doing to labor supply. So what all that means to me is I think we have more inflation in train, and I am very, very puzzled by market expectations. Markets right now
We're all
are
puzzled,
expecting
lady.
the next Fed chair put in place by President Trump to cut by a sum total of 40 basis points. My guess is if that came true, President Trump would be incredibly disappointed in his Fed chair pick. So I think we're in for lower interest rates, higher inflation.
Most likely.
Yeah, I guess we'll see if the markets try to maneuver ahead of that and price that in. It doesn't really seem to be happening yet. But Lydia, you did mention that you think services inflation is to some degree a monetary phenomenon. So
look at that.
An outgrowth.
The chances of a rate cut slightly increased on all of this.
Where do you think the neutral rate is? What are we heading toward in terms of where the Fed's going to land?
Yeah, so the neutral rate is a bit all over the place right now. We have estimates that are really low, some below even 1%, and then you have estimates more in the 2.25%. But I do think we're also, to Wendy's point about the labor market, that natural rate may be shifting a little bit. In my opinion, I think there is something happening in the labor market where we're having
is still
some
leading
shifts.
the race over
I'm not
here.
sure it's entirely cyclical, and I'm not entirely sure that the Fed can actually solve some of the changes that are happening. I think some of it is also a hiring. We've had a low,
the Qs
low
and the
hire,
Russell are looking
low
good,
fire
folks.
rate, but businesses are
SPY
grappling
is
with
looking
higher
decent, a
inflation
bit weaker.
and still
I mean,
looking
we had
for
such a
ways to
big
find
wick.
cost savings within their businesses, and you're seeing that, I think, starting to affect employment. And that, I think, is a very serious issue and may potentially change where the natural rate is. And it's something also that the Fed can't do a whole lot to fix. If they are just going to throw money at that problem, which at the end of the day, if we're just being transparent, that's what the Fed can do, it doesn't really fix any of those fundamental changes in the labor market that businesses are having to go through right now, whether due to AI or just trying to find efficiencies on their balance sheets. But at the same time, as the Fed tries to increase employment while we still have a very relatively high inflation environment, all it's going to do is continue to push up equities, and it's not going to help small businesses or households at the end of the day.
All right, we'll see if they're in that kind of a fix or not into
pump.
next year. Lydia, Wendy, thank you very much. Appreciate it. And Steve as well, of course.
Thank you.
It's all up. SPY's up, Q's up, Russell's up,
who has made her
Bitcoin's
way over
up.
to Blackstone's headquarters, where she's going to be bringing us a special interview. Becky.
Who's she interviewing? Becky. We haven't
Hey,
seen her in a while.
good morning, Andrew. Good morning, Mike. It's great to see you guys again. Yes, we are at Blackstone's headquarters today on Park Avenue, and the firm this year turning 40. This morning, they're actually releasing their annual holiday video. Take a look.
Last year's was so cringy.
Well, I was thinking of becoming a DJ.
Steve Schwarzman, a DJ? He'd crush.
That's because
a cameo from David Solomon on this one this time around. But the theme this time is, of course, 40 years back, Back to the Future. And, yeah, you got to check the video out yourself to see all of the 80s retro things that are going on with that. We're going to have more on the firm's anniversary, the markets, and much more. We're going to be sitting down with Blackstone's co-founder, Steve Schwarzman, right after this break.
That actually might be interesting. We should tune into that. All right. Here, let me chill that for a second so you guys don't have to listen. If you are just joining in right now, first of all, thank you for being here at the crack of dawn. As I said, if you are, where is it? No. Why don't I have my own channel? Why can I not? So in the update video yesterday, right here, stock market crash. Santa crashed the stock market. In this video, I laid out the major things to look for from a news perspective, from a technical perspective, and from a flow perspective to talk about this concept of can we get saved here? So I was looking at the daily chart, and I know I'm kind of going in a mismatched order, but from a technical perspective, I said, hey, this might just be a fake out breakdown like we've seen before in late November, where we slice through the 50 EMA, but if we can quickly recover that, this could just be a higher low, setting us up almost for an inverse shoulder, head, shoulder. I know it's a little oblong, a little bit of the hunchback of Notre Dame, but you get my point of we pump up, we pull back, it's a higher low, we save ourselves at a very important level. And to me, okay, that's interesting. But where I get really excited is if we start to take out these recent two highs. If we can take out the high of yesterday and the day before, this is by definition a higher low, setting us up for a test of the all-time high and potentially even more. I know that's from a technical perspective, and I said maybe the gas that really lights this fire and makes it go boom would be the inflation report coming in lighter than expected, which is literally what we just got. If you're just joining in right now, we did get the inflation report partially from October, mainly from November. And what you can see right here, CPI coming in way lower than expected. In fact, off the top of my mind, I can't remember the last time it came in soft, cooler than expected to the tune of 0.4%. That is way lower than expected. Generally, when it's coming in as a like hot or cold, generally it's right on. Maybe it's 0.1. Sometimes it's 0.2. This is 0.4. That is way lower than anticipated, which all of a sudden, when you look at the markets, maybe it increases the chances of a rate cut in January. Granted, you can see the odds did increase. It looks like it went from 23 to 29%. So it was a 6% increase. So it's still not likely, but it is obviously changing the market. So if you're just joining in right now and you need a quick description of what's happening, inflation is coming in cooler than expected, perceived to be bullish in the market right at a key level of this breakdown. So maybe just a little fake out breakdown, a little bit of a bear trap, which was the entire point of this video. If you want a more detailed explanation, I implore you to watch this video, Stock Market Crash. It's on Rumble. It's on YouTube. Hang on.
Here at Blackstone's headquarters on Park Avenue in Manhattan this morning. Of course, this is the world's largest alternative asset manager, and it's just turned 40 years old in 2025. Joining us right now with a look back and a look ahead is the firm's CEO, chairman, and co-founder,
I wonder what he's going to say about
Schwarzman.
the AI
Steve,
trade.
Thank you for taking the time to sit down with us.
Well, it's fun for me.
It is fun for us, too. We don't get the chance to do this
Markets
very
still,
often.
Look at the small cap sector,
40
folks.
years
Holy
since
cow.
you built this firm.
Holy guacamole.
Coming out with $400,000 in capital, where you sat down and kind of branched out into this new and fledgling private equity world that you helped build. What do you think 40 years later with a market cap of, what is it, just about $187 billion today?
Well,
is this going to end up being super boring?
At the top.
Yeah.
So that's been quite a journey. And
hey, folks, if you could help me out, smash that like button, gets the video in front of other people, grows the Goonie community, whether you're watching on Rumble or YouTube. Smash the like button, turn on your notifications. We're celebrating a Payday Friday.
We knew we'd be doing private equity. We called it LBOs, and we also knew, besides our advisory business, that we'd be starting new
I'm already
business.
getting massively bored of this guy, so let's talk about the other important stuff that you probably care about. So right now, market is strongly green. From a technical perspective, it is saving itself at a technical breakdown, so support is acting as support. Now, why is it jumping so dramatically? We just got the inflation report coming in way cooler than expected, and we're even seeing a slight shift in the odds of a potential rate cut in January. Though still low, the relative odds are increasing, and like I said, it came at perfectly the right time. You're seeing a beautiful bounce in SPY. You're seeing a beautiful bounce in the Qs. You're seeing a beautiful bounce in the Russell. The Russell didn't even test this. That is crazy. So across the board, SPY, QQQ, IWM, all showing strength this morning. Excuse me. Coffee went down the wrong win hole there. The wrong pie hole there. Anyway, even Bitcoin trying to save itself from this breakdown right now. So we're seeing a bit of renewed optimism. Now, will it hold? Hey, your guess is as good as mine. But from what I'm seeing going on early this morning, that is just up, and away. Remember, the announcement came out right here at 8:30. We popped up, we pulled back, we popped up, higher low. Beautiful entry right here at 170, risking 154, 16 points. And you are already up 80 points. That's crazy. Absolutely crazy. But hey, a quick little round of applause for your boy for not degenerately trading this in pre-market. You know, honestly, it's kind of sad because I probably would have made money if I traded it, waited for this pullback, whatever it was. Probably would have ended up going my way, but maybe not the most healthy way to think of the overall situation. But hey, it is what it is. So right now, there is optimism, but from here, that doesn't necessarily mean we're out of the woods. Of course, we have to hold. And for me, the statistical likelihood of this pop holding becomes evident when we start taking out the previous day's high from just a myriad of statistical studies, from just the sentiment of the market. If we can take out the highs of the past 2 days, I think more and more people would be very happy to hop on the potential Santa Claus rally, because now instead of anchoring their risk to this low that we saw in late November, they can anchor this risk to this new higher low, play this momentum, ideally get this breakout, and maybe, just maybe, we could see 7,000 by the end of the year. But with that in mind, yes, if you're joining now, we did just get the inflation report, but there's a whole heck of a lot of other things going on this morning. Trump defends handling of economy, announces a military dividend. President says active duty service members will receive 1,776 warrior dividends. So this was pretty much the big announcement last night. President Trump had an announcement around 9 p.m. Eastern. A lot of people assumed it was going to be related to a declaration of war against Venezuela. It ended up kind of being nothing. I saw all the major parts of it. It was very much a nothing burger. I don't know how you guys thought about it, but I just kind of found it to be boring. Trump announces a warrior dividend of 1,776 to every U.S. soldier in primetime speech. President Donald Trump, in a rare primetime address to Americans, said, "I inherited a mess from the administration of the former President Joe Biden. The warrior dividend announced for 1.45 million U.S. service members will cost about $2.5 billion. Trump predicted the largest tax refund season of all time in 2026 at a time when many Americans are worried about inflation and the strength of the economy. So overall, it's good. I support this. Hell yeah. Let's support our vets, give them the money. But this was touted to be maybe a bit more impactful to the entire world. This primetime address, it's not common that the president is doing a primetime address. So I think we all had expectations for kind of something crazy. And once again, I support this effort. I'm cool with giving all of our soldiers this, I guess, a warrior dividend. I'm fine with that. But I think the expectations were for something else. Trump announces military warrior dividend amid inflation woes.
Tonight, I am also proud to announce that more than 1,450,000, think of this, 1,450,000 military service members will receive a special, we call warrior dividend before Christmas, a warrior dividend in honor of our nation's founding in 1776. We are sending every soldier $1,776. Think of that. And the checks are already on the way. Nobody understood that one until about 30 minutes ago. We made a lot more money than anybody thought because of tariffs, and the bill helped us along. Nobody deserves it more than our military, and I say congratulations to everybody.
I want to bring in Joe Matthew, our Bloomberg Balance of Power co-anchor. He joins us live from Washington. Joe, what sort of stood out to you in this speech from the president?
Still holding. Look at that.
Well, I've just never seen a presidential address, certainly in prime time, like that, read that quickly. He was racing through obviously written remarks and barely took a breath, it sounded like, as he went through copy that lasted just shy of 20 minutes, starting with the line, 11 months ago, I inherited a mess and I am fixing it. This was largely a greatest hit speech. There were a lot of questions about whether the president would announce any new policies with regard to Venezuela, for instance, with the military action and the blockade that he announced last evening. The one new thing that we heard, And we heard some whispers about this before the president spoke, was this warrior dividend. He says in honor of the nation's founding in 1776, more than 1.4 million military service members will receive a special warrior dividend before Christmas. He says the checks are already in the mail, and this money is from the tariff regime, which, of course, he had good things to say about. President talked indeed about inflation, and this is something that really helped to prompt the speech, the issue of affordability. And I thought it was interesting to hear him not only blame President Biden, to your point, for increasing prices, but he also ran through actual items with their inflation numbers tied to them. He says Thanksgiving turkey down 33%. Eggs are down. He walked through everything else he said falling rapidly, which is, of course, not true. But right in the middle of that speech, he also said, quote, "It's not done yet, but boy, are we making progress." And that sounds a lot different than the Democrat hoax that he was calling affordability and inflation just a couple of days ago.
All right, so that was the skinny on the announcement last night. U.S. approves, on top of this, $11 billion in arms sales to Taiwan, angering Beijing. So in the background, as you would expect in U.S. political arena, there's always a ton of things going on. So this is another major thing that happened yesterday. The final big deal that I saw yesterday, let me see if I could just find you proof of this. Hang on one quick second. Dan Bongino. Did he post it here? No, he must have posted it from his official. Was it Kash Patel here? I'm just trying to find you the official one. Dan Bongino is stepping down. When were all these 14? Okay, right here. Dan Bongino, the deputy director of the FBI. I will be leaving my position with the FBI in January. I want to thank President Trump, AG Bondi, and Director Patel for the opportunity to serve with purpose. Most importantly, I want to thank you, my fellow Americans, for the privilege to serve you. God bless America and all those who defend her. So Dan Bongino, once again, the deputy director, stepping down. There's a lot of assumptions that it relates to kind of something happening tomorrow, the release of the Epstein files. Now, is that true? Is that not true? I have no idea, but I can tell you he is stepping down. January will be the end. And what's interesting, especially for those of you on Rumble, this actually means the return of the largest podcast, the largest live stream in the world. It's actually kind of crazy. When he left his show, he had some of the craziest numbers ever, not just on Rumble. I'm saying like literally worldwide. So when he's coming back, I have a feeling that it's going to be one of those moments that really causes the servers at Rumble to hum, because I have a feeling that there's going to be a massive, massive interest in his renewed updating commentary. So just want to throw that out there. Another piece of political drama that is playing out in real time. Now, let's dive in, because this is going to be important here. Another part of the reason why I said, hey, the market could easily bounce with respect to the SPX, the NDX, RTY, and it all kind of my thesis on it. And once again, you can fact check me on this one. It all relates to Micron's report last night, and this was in the update video where I said, hey, Micron, for this particular week's worth of earnings, it's the only one that's giving us a sense of the reading of the world of the AI trade, because we know recently, if you look at Oracle, ever since its report, it got clocked. Same thing with Broadcom, AVGO, it got clocked. So those were the most recent semiconductor-related plays. Oracle got specifically nailed because not only did it have bad earnings, but then after that, one of their backers, Blue Owl, basically said, hey, we're not helping you build out another data center. And that's why I got clocked to the tune of 5.4%. So overall, why the market's been getting hit is just traders and investors are kind of questioning the current state of the AI trade. And of course, that dynamic can change at any moment in time. And then finally, we got Micron's report last night. And as you can tell, it was good. Micron forecasts surging revenue as computer memory demand for AI remains high. So all of a sudden, a little bit of a shift in the tune of what's going on with the AI trade. So as you can imagine, we're currently setting up for like a 1-2 combo punch. All of a sudden, the negative sentiment that we've recently had for the AI trade, well, that's coming into question because of the Micron report. And then fast forward to this morning where we got a better than expected inflation report. That's the 1-2 combo punch that is setting us up for this beautiful recovery. And obviously from here, anything could happen, but I'm liking what I'm seeing in pre-market. And the golden question right now is it going to hold? Tech stocks fueled rebound as Micron jumps 12%. So Micron this morning, ticker symbol MU, is up 14.5%. Look at this 30-minute chart. Reported last night, awesome, climbing up and up and up. And then we got the 8:30 announcement this morning, and it just keeps going. At one point yesterday, it was at 221. We're talking about 260 this morning. So like I said, it's a combo situation, but one important aspect of this is the fact that the AI trade, all right, the sentiment maybe in the short term not being so negative, and that's why exactly in pre-market, well, also the CPI report, you have Avago up 2.8%, you have Nvidia up 1.7%, you have AMD up 2.85%, and really SMH, which is the ETF for this entire sector, is up 3% early this morning. Once again, this is the ETF tracking the semiconductor sphere, so it's a good bellwether, honestly, for the AI trade, and we're really seeing it right now. So this is what they had to say on Bloomberg.
The market has consolidated for the better part of the last 2 months, and I think this consolidation will probably last for a little bit longer. What we're watching is the growth inflation mix, right? We are looking at the sort of the K-shaped economy in the US and the lower part of the K beginning to have its say. The labor markets are weakening. At the same time, you're going to get a CPI release today, which probably will show core inflation at 3.2%, slightly north of 3.2%, at a point when the Fed is already priced for 2 or 3 cuts from here. So the markets are already expecting the Fed to cut, and inflation is going to go higher at the same time as growth coming lower. And this is, I think, is going to put some pressure on equities in the very near term, right? And along with the fact that, as capex to sales have continued to increase for all the AI names, the market has become slightly less forgiving in terms of valuations, right? Oracle is not just the only problem. Yeah. The market's become slightly less forgiving for the worrying about IPOs coming next year, and that could be a problem for the tech trade. So all of these concerns near term, I think equities do consolidate. So we could be waking up in March with the S&P still at about 6,750 or 6,800. But once you start getting the checks in the mail, once you start getting the fiscal boost, the refunds, we think that probably is going to lead to the broadening trade.
So the fiscal side is important. You want sort of evidence of that. But what about evidence on the AI side? So we have this huge capital investment taking place right now, but yet the benefits of this are maybe a little bit delayed. The productivity bonus, the productivity boost we're going to get from this we're all waiting for, Banning. So what do you watch specifically to get an early sense of whether we've expected too much or too little?
This is very important. I think everybody understands that AI is going to impact every company at some point in the future, but which companies will be impacted first, right? Surely these are companies that have a lot of data that they can harness and perhaps a lot of labor that they can replace. So what kind of companies have a lot of data and a lot of labor? These are asset managers, insurance companies, retail companies, commercial and professional services. So this is what we're going to be watching. We're going to be watching financials, and we're going to be watching retail. We're going to be watching commercial and professional services. These industries, we're going to be looking at sort of at a bottom-up level where the sales per employee in these companies are rising. Because I think these will be the vanguards, right? This will be sort of the leading indicators of tech love moving from the producers of AI to the consumers of AI.
Okay.
And we're hoping that this comes through the course of 2026. That's going to be a necessary condition for this trade to carry
so that's
interesting take on the rebound, and I also wanted to share that because of the commentary of what to kind of expect in terms of maybe the first/second quarter of next year, of when all those checks come in the mail, of when they really seep into the market or the economy and thus reflected in the market. Kind of a call out for roughly that March time period. Not too far off from what Tom Lee has been saying here. I'm bullish next year, but it might take a little bit. It might take a little bit for the market to quote unquote like get kickstarted for the year. So is it right or wrong? Obviously, we're going to be finding out. Hindsight bias is going to be 2020, but it is at least, I guess, something to consider. Now, there is important other news on individual stocks. Coinbase adds prediction markets and stock trading and push to be a one-stop trading app. Coinbase is expanding into stocks, more sophisticated trading tools, and prediction markets, positioning outcome trading as part of the broader single app brokerage. So basically trying to become a direct competitor to really Robinhood. The company is also rolling out a tokenization roadmap to lay the groundwork for bringing more traditional assets on chain, including equities. It is also widening the support for businesses and developers with expanded APIs across custody, payments, trading, and stablecoins. So once again, Coinbase still in the world of crypto, but expanding or attempting to expand into the world of equities and also the prediction markets. So basically at this point, effectively offering everything that Robinhood is now offering, offering crypto trading, prediction markets, equities trading. I don't know if Coinbase has yet said anything on derivatives trading, such as futures or options, but if they're getting into it, I would assume that they are very much getting into it. So anyway, here's Coinbase rolls out biggest app overhaul yet, adding stocks to, and derivatives. I'm just curious, what derivatives?
And Mackenzie Segalo spoke with the CEO, Brian Armstrong, and has more. What is going on with Coinbase, Mackenzie?
Hey, Brian. So Coinbase is rolling out a major slate of new features designed to turn its app into a one-stop financial platform, adding stocks, more advanced trading, and prediction markets, while also doubling down on its on-chain ecosystem and tools for businesses and developers. Now, I just sat down with CEO Brian Armstrong, and he insists this is not a copy-paste of the Robinhood playbook. Coinbase already owns a massive crypto-native audience, and now he wants the main app to be the place that you trade everything: stocks, derivatives,
it feels like it's
and
copy
prediction
and paste
market
from
contracts, alongside a longer-term roadmap aimed at eventually bringing equities on-chain. But the space is getting crowded fast. Kalshi and Polymarket are battling it out, and Robinhood just jumped deeper into sports by adding NFL event contracts last night. But Armstrong tells me that the point isn't just to trade outcomes here, it's to read the world in real time, and he thinks prediction markets can become a mass market information product.
Maybe 1% of people use it as an asset class to trade, and 99% of people are using it as a way to figure out what's going to happen, almost like a competitor to traditional media or maybe even entertainment.
And that's the bet. Coinbase wants outcome trading to become one more daily habit inside of its app as it builds toward being a next-gen brokerage. Brian?
So you got Robinhood also getting into these prediction markets, leaning in, as they would say. Is this like the next big battleground for the retail trader?
Absolutely. Coinbase is looking at what Robinhood has proven out over the past year. More than 11 billion event contracts traded. Its fastest growing product by revenue ever in Robinhood's history. A stock that's up more than 200% year to date. Meanwhile, Coinbase is in the red, down about 5% on the year. And it sees this diversification as a way to bring new users into the ecosystem with this sticky product that they haven't offered before, a way to keep them there even when crypto prices are trading lower like they are today.
Very quickly, an incredibly important question. Where are you?
I'm in Fort Mason, San Francisco. So Brian Armstrong is just inside of this building pitching the world on this new slate of products. And I just talked to him, and I came out here to talk to you.
All right. Not once again, there's a lot to cover today. As you can see, it's not the only stock moving early this morning. DJT is also up, so we got to get into the news there. Trump Media to merge with fusion power company TAE Technologies in a $6 billion deal. Trump Media and Technology Group announced a merger agreement with fusion power company TAE Technologies valued at more than $6 billion. The all-stock deal, expected to close in mid-2026, will result in shareholders of each firm owning approximately half of the combined company. Trump Media stock, which trades on the NASDAQ under the ticker DJT, soared in pre-market trading. So DJT, which kind of started out representing exclusively Truth Social, then there were some crypto deals. Well, now apparently it's just becoming a good old-fashioned business conglomerate, and that's exactly why DJT is up this morning. Closed out the day at 1047, currently at 1317, up 25% in pre-market trading.
Alex, stay with us for just a moment because we've got some news about a new media merger, and it's a pretty unusual one. The Trump Media and Technology Group is announcing plans to merge with TAE Technologies. That is a fusion power company. This is an all-stock merger of equals that's valued at more than $6 billion. And upon closing, Trump Media will be a holding company for its current portfolio of media brands, including Truth Social. Also, the power brands that are owned by TAE. If you read this release, which I'm just doing right now, it says that this transaction is designed to create one of the world's first publicly traded fusion companies. Basically, going through with this, Nunes is saying that this is a situation where Trump Media and Technology Group built what he calls an uncancelable infrastructure to secure free expression for online for Americans. And now we're taking a big step towards a revolutionary technology that will cement America's global energy dominance for generations. I mean, a completely unusual combination between a media company and a fusion company, a power fusion.
Also a media crypto company. So as she said, it is very, very unusual. Question for all of you. I don't mean this rhetorically. I mean this like actually. Do you think sitting politicians should be able to actively trade stocks and increase their own wealth? Yes or no question. I don't mean this rhetorically. Honestly, if you had the power, like exclusively you had the power to make this decision, do you believe sitting elected politicians should actively be able to trade stocks and increase their own net worth? Yes or no? And not rhetorical. I very much want your answer. I'm seeing no, 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 F no, 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 full stop, no, negative Ghost Rider, no, 100% no. Okay, so if we're all on the same page there, and that is what most people agree with, do you think that this is appropriate? The Trump family business empire is growing. We mapped out 268 pieces of it. A second-term boom in crypto and other areas has created billions in new wealth for the first family. So if in general, let's just say the average person watching this is against the concept of being able to use your position by actively trading stocks to increase your wealth, do you think you should be able to use your position to just grow private businesses or potentially public businesses to add billions of dollars of net worth? If we're not okay with the stock trading side of it, why are we okay with this? Trump isn't doing this. It's the CEO. No, he is. If you don't think Trump is involved in this, it's crazy. There's literally 268 pieces. Like when President Trump ran for re-election in 2024, he and his family already had vast business interests stretching from Manhattan office towards a golf course in Ireland to hotel deals far away in Vietnam. And since then, it has just kept going. Ventures launched since Trump's re-election generated at least $4 billion in proceeds and paper wealth for his family as of December. $4 billion added. $4 billion added, and he's been in office for 1 year. And granted, it's not exclusively him. I understand it's his family. But if we're all not okay with stock trading, you guys are probably mad at Pelosi, but what's the difference? Pelosi isn't trading stocks. It's technically her husband. So right here, if you're saying, well, it's not technically Trump, it's his family, what's the difference? I'm just saying maybe we should be a little bit more logically consistent. If you don't like the fact that the Pelosi family is adding to their own wallet, increasing their own net worth, it is not Nancy Pelosi actively trading. It is her husband. So if your argument here is that it's not technically Trump doing it, it is still Trump's direct family. He also doesn't take government salary. His government salary is $400K. He made $4 billion. Who gives a shit? You don't understand that that's just something to like make it look good of, look at me, I'm a man of the people, I'm not taking my $400K salary. Dude, the net worth went up $4 billion. I'm saying billion with a B, folks. Billion with a B. And it's unprecedented for a president to have such far-reaching business interests while in office, including in his areas administration regulates. Neither the president nor his family have ever engaged or will ever engage in conflicts of interest. Yeah, we've all heard that before. I'm just kind of pointing out the fact that the world very much did not like the fact that Hunter Biden was on that Burisma energy board getting $80K a month for advising when he didn't know anything about energy. But then yet we're all fine with this? Like, how does it make sense? I'm just saying it feels to me from what I see on mainstream media, social media, and everything in between that people are fine to accept it if it's the person that they voted for. But if it's the person they didn't vote for, they specifically call it out and do not like it. All I'm saying is we should be consistent here. Whether you do or don't like what the Pelosi's family is doing, if you do or didn't like what the Biden family was doing, we should apply that also to the Trump family. We can't pick and choose based on if you like their politics. You have to make your logical decision, your moral opinion on what the actions were. It shouldn't be dependent on the last name. Someone is saying it's not the same. Explain to me how it's not the same. Explain to me how it is not the same that Pelosi's husband is trading like no other, making $250 million. Explain to me how it is not Hunter Biden making $80K a month on an energy board in an Eastern Bloc country, and then all of a sudden, a war broke out a couple months later. Like, what is the difference here? What is the difference? I feel as if I know the difference. I feel like the difference is just, did you like that person beforehand? It feels like we are in the world where you're willing to accept it if you like the person beforehand, and you're not willing to accept it as being all right if you didn't like the person beforehand. That feels like that's the only delineation. If for some reason I like covered all the names, I see some people mad that I'm calling out the Trump family here, but listen to me on this. Imagine if I pitched you this story and I said the Biden family did this. I said the Biden family in 1 year added $4 billion of net worth, and it was all the kids and nephews and nieces. And just imagine this world that it was exclusively Biden's name, and I pitched this to you. Would you be here? No, that's fine. Like, seriously, like, ask yourself that. The difference is Hunter was getting paid solely for his connection to his daddy. You don't think these deals are going through because of their connection to the president of the United States? Like, this is the world, folks. I'm so sick and tired of this tribalism of left and right, of like, oh, like, we got to. No, it's very much it's populist versus elitist. This is people in power with political influence, financial influence. It's all of them. And they love if we're split on the left and right paradigm, because then you don't question this idea that you're somehow okay with this. I would honestly bet my entire net worth that the people who are attempting to define this, if I switched this story, switched all the words out and said, nope, this is the Biden family, they've added $4 billion, you would be losing your mind right now. You would you'd be like, this is the most corrupt government we've ever seen in the world. And then yet, because it's the name of the person you voted for, you're now also like somehow fine with it. It really feels as if the delineation is exclusively who you voted for and not an objective moral take on this particular situation. Like, it really is not. Like, it's okay to like their policies. You could be like, yeah, I don't like the fact that they've added $4 billion in net worth, but I like what they're doing with immigration. It's okay. Folks, it is all right. We're all adults here. You don't have to fully agree or disagree with anyone. You might absolutely hate Biden, but I guarantee you I could find one law or regulation that he passed that you're like, okay, I kind of support that. This isn't an all or nothing thing. This isn't a black and white world of I fully agree, I fully disagree. I'm here to remind you, as an adult, you could say, I like what he's done as president, but maybe I don't like what he's done with his personal business. That's okay. You don't have to fully agree or disagree. Like, it is all good, folks. We are adults. That is acceptable. In fact, I would actually argue that kind of shows that you actually have some maturity going on in your world where you can call out the certain things you do agree for and don't agree. That's fine. It's all good, folks. The difference, Matt, Biden family deals don't exist without Biden in office. The Trump family has been in business long before politics not be. Yeah, but that doesn't mean they're going to get these deals. What are you talking about? You really think they would have the exact same deals right now, the Trump family, if Trump wasn't currently in office? Like, you really think that it had nothing to do with the political connections of the family? I mean, you can believe that, but if you want to believe that, you're naive, and it feels like you were just born yesterday if you're like, they would have had all these deals. Most likely, yes. Well, okay. You're stupid. You just don't know what you're talking about. If I agreed with you, we would both be wrong. Like, you are as naive as it comes, and you're definitely just a person who is going to believe anything that you are told by the person you voted for, because you're just that naive and you can't think with your own brain. But that's cool. Trump and his family have interest in a sprawling web of businesses, financial disclosures, and security filings shown. Each entity is shown here with a dot, and it just grows and grows and grows. It's kind of wild. Much of family business focuses on real estate and licensing of the Trump brand, includes 16 golf clubs and several hotels, as well as office towers. So real estate, finance, media, merchandise, other, and I guess now there's going to be a new bubble between the mixture of media and other, because the big news of the day with DJT is the combination with a fusion power company, as in we're talking about actual fusion, like legit power fusion. So it is sprawling. It is expanding. Will it work? Will it not work? I don't know. Your guess is as good as mine. But what I can tell you is the immediate reaction is the fact that the market does like it. Yesterday, DJT, the ticker symbol for effectively Truth Social, that had a little bit of a crypto aspect to it, and now it's going to have a power fusion aspect to it, closed at 1047 yesterday, currently trading at 1312 in pre-market trading. It is up 25% in pre-market. So the market very much, at least in the short term, term liking what's going on. If you want to read more about the 268 business connections that the family, I want to know the Barron Trump one. What's going on with Barron Trump? Allegedly, he's made $100 million in crypto already, and I'm pretty sure he's like, I don't know, 19, 20, 21 years old. I believe he actually is by me. I believe he goes to NYU, so he's actually a couple blocks away from where I am. Does it have anything about, I just want to know Barron Trump's. No specific call out of Barron Trump. But anyway, that's another piece of news. So basically this morning, you have big news on DJT. You have big news on Micron from reporting. You have news on Coinbase basically copying Robinhood. And then I also want to let you know that FedEx is going to be reporting after the market closes today. So in terms of individual equities, yes, there is big news across the board. I would argue, obviously, that the biggest news is Micron because that is being extrapolated to the rest of the semiconductor industry, which is why we're seeing the semiconductor ETF, SMH, already up 3.35% this morning because most likely on the back of Micron's good earnings. And then when you put that all together with the fact that we got a good inflation report this morning, November consumer prices rose at 2.7% annual rate, lower than expected. Delayed data showed way lower than expected, not just a little bit lower, but way lower than expected. And that's exactly why in pre-market trading, you're seeing the SPY pop, you're seeing the Qs pop, you're seeing the Russell pop, and you're even seeing Bitcoin finally show a little bit of life. So it seems, I mean, knock on wood, that we might be getting a little bit saved here. We obviously had this fake out breakdown. We popped up, we cracked, we had the 50 EMA, this trend line. We got that downside gap fill. In fact, we had a 50-point overshoot of the downside gap fill. And on a noteworthy aspect, the NASDAQ was really getting hit. But we might see a bit of a recovery. So if you're looking at NDX, I would want to see it recover 25,200. Basically, I'm looking at the high of the last two trading days. Whether you're looking at the S&P 500, whether you're looking at the NASDAQ, it's all the name of the game is, can we take out the last two trading days highs? Because that would confirm this as a lower high, and that would set us up for the potential of still holding on to this Santa Claus rally. So as dire as things looked over the last 4 days, if you ask me, I think this was doing really because you have profit taking at the end of the year, but I think a lot of this was because of VIX expiration. Remember, on the month of OPEX, or the week of OPEX, on Wednesday, so most options contracts are going to be concluding on a Friday, as in tomorrow. But on Wednesday, that's when your vol contracts expire. That was yesterday. So if you ask me to like really explain, yeah, some people are hesitant about Avago and Oracle, and right now they were questioning the AI trade. But I think part of this large range was because we had no real stability in the market. I mean, when the market opened, it was like sub 10%. And then you put that together with VIX expiration. I mean, I think that is a good explanation there. Matt, you do know that envy and coveting are sins. I'm not envying and coveting. It's called logic. See, that's what I like. You're dressing it up as some this like bastardized Christian opinion on it of like, oh, I'm jealous. I'm not jealous. I'm calling it out. You're more than happy to call out what Pelosi's doing financially. You're more than happy to call out what Biden's doing. Like, couldn't I say the same to you, that that's a sin? You're just mad that the Pelosi's are making money trading. Like, you're what was it that you're envy and coveting their, like, my point is if I apply your argument to just another person, it doesn't hold suit, which means it's a poor argument. I don't know why, but in the basic education system of the US, people are not taught critical thought. They're not taught deductive reasoning, and for some reason the universe has put it on my shoulders to teach all of you like basic fucking logic that you guys, I guess, just either mentally cannot comprehend, or it was just never ever taught to you. Go back to trading, but no, you need this basic logic for trading. You need to have critical thought. It's the same skill set. I mean, one of it is just applying it to a moral situation, but obviously you can apply it contextually, the critical thought ability, to active trading. It's all one in the same world. And I'm just pointing out how right now there are millions and millions of people that they're logical, and it does cut both ways. I want to clarify. If you are very right-leaning or very left-leaning, there's a good chance that you're falling for this logical pitfall of, oh, okay, it's good for my side if they do it and it's accepting and I'm willing to overlook it. But as soon as the other side does it, I am not doing it. Matt voted for Mamdani. No, because I understand that socialism is the dumbest fucking economic setup of all time. But once again, I came to that conclusion because I have basic critical thought. We have basic logic, Matt. No, you don't. Clearly, you don't. So sick of Matt's rants. Well, congrats to you. I'm sorry if it hurt your feelings. What's interesting about it is, isn't that a strong saying of like right-leaning people of like, facts don't care about your feelings, stop crying, like pick yourself up by the bootstraps. But then yet you guys are the first group of people to be like, don't say that to me. Don't say that about my side. Once again, you're falling for this logical fallacy of as mentally tough as you like perceive yourself to be, like a little bit of like pressure like actually starts to crack you. You like just start to lose your mind. You're like, you can't say that about me. That's not nice. I know how to critically think. We are critical thinkers or we wouldn't be here. Well, it comes into question. I would assume maybe, I hope, fingers crossed, that you're able to critical think in some aspects of your life. But if this gets you so spun up this morning for me to kind of point out, hey, you should either be fully accepting of Pelosi, Biden, and Trump, or you should all call them out equally. If all of a sudden you're like, no, two of those are bad, but one of them is fine. And then all of a sudden you spiral like a toddler and you're like, you can't say that. You can't say that to me. It just kind of maybe shows that this isn't for you. I'm so grateful to be in the presence of greatness, Matt Kohrs. Yeah, you're welcome. I'm just doing this out of the goodness of my heart. You are more than welcome to be in my presence. I'm happy to come down from Mount Olympus here and show you guys some basic critical thought abilities. I'm more than happy to do it. It's a cult, Matt. I mean, but they're on both sides. It does exist on both sides, and obviously, I want to stress that this isn't like a one side thing. Obviously, the two cults, the tribes, as I refer to them, they do express like different aspects. Like they're not perfect reciprocals of each other. They're not perfect mirror images, but they're both equivalently as fucking stupid. Like they really, really are. I deeply believe if you're extremely spun up on the left or the right side, it just means you actually can't think for yourself at all, like truly at all. I think it's actually one of the most telltale signs of a severe lack of intellect, or you're just so incredibly gullible that you read the certain headlines you like and you're like, well, that must be truth, and you move on with your life. It just is what it is. Give us some SPY levels, Maddie, dude. More than happy to oblige. So we're seeing a nice recovery. Right now, if the market were to open, we're trading at 6,780. So please keep that in mind. 6,780. Look at that. We traded all the way to the top of the transition zone. So as I always do, I mark out the previous high, low, and close. That is the green, the red, and the white line. The red and the white line are very close to each other. We pretty much closed at the low of the day. Above that, you have the white block, the transition zone, thought to be bullish above, bearish below, choppy within. And then the final thing on your screen is going to be these yellow horizontal lines, which is where the big players are at. And one of the first things that jumps out to me is 6,810, which is about 30 points north of where we are right now. A SPY equivalent would be an additional $3, but I'm seeing a clear negative gamma node right there. Let's dive into it. It's just long calls. Actually, you have some very interesting bullish bets above. I zoomed out a little bit too much, but you can see right here, bullish bets at 6,810, at 6,825, and then also at 6,850. And these are all zero DTEs. They are all expiring today. So once again, right here, 6,810, 6,825, and 6,850. I believe I marked those all out. So 10 was pretty much the high from yesterday, 25, and then also 50. So yes, they are all marked out. Obviously, those would be your natural bullish targets. The bull case goes like this: 6,780 holds. Great, that holds. Bullish target one is 6,800. From there, you'd be watching yesterday's high. Technically, it's 10, but that's just the closest strike. From there, 25, and then from there, 50. That's your bull case. Now, however, if you believe this is a dramatic fake out, and then all of a sudden you have profit takers or whatever it is, you would be looking for the failure at 6,780 or 6,800. From there, you'd be looking for a push to 6,760, followed by 50, followed by a push to yesterday's low, and then from there you'd be watching 6,700. I deeply believe, as a day trader, as a scalp trader, whatever you want to call yourself, it is always beneficial to have the bull case and the bear case. Sometimes on the internet, I'll get flack. They're like, oh, so you're saying it could go up or go down? Well, yeah, that's what having a bull case and a bear case is. And then whichever scenario seems to be playing out, that's the scenario you should be playing. In my humble opinion, the proper mental framework for active trading isn't coming in and saying, I got to be bullish. It's not coming in and saying, I got to be bearish. What you do is say, I have my bull case, I have my bear case. You pay attention to momentum and price action, price structure. You look at the options flow. You try to see which one is more likely. And because you've already put in that legwork of knowing the bull case and the bear case, well, whichever one seems more likely, that's the one that you play. So if you ask me, it is not good to come in and be married to this idea of like, it has to be bullish, it has to be bearish. If you ask me right now, I would say that the bulls are currently in control. 5 minute, 10 minute, 30 minute, and even the 4 hours about to recover there. Looking at the Nasdaq, 5 minute, 10 minute, 30 minute, all bullish, 4 hour recovering. I'm seeing that the Russell's looking strong this morning. Bitcoin's looking strong. We had that very good report from Micron and DJT. Micron's going to be a bit more impactful because obviously it kind of helps lead the way on big players such as Nvidia, Broadcom, and all of these have been getting messed up lately. Even Oracle's starting to recover. So right now, I would say, yeah, but what does that mean? Well, it still means that we have to be a bit patient because yesterday, the options market right here, the Delta reading on the Mag 7 and on the S&P 500 got absolutely decimated. So that's the final thing, that we're not really going to start getting this information until 9:30 where we can get a better idea of the flow. But overall, if I had to guess right now, I would say the bulls have a chance. But once again, I'm just playing key level to key level. Yesterday when I started the day, I was also bullish. I mean, ask anyone in the Discord. My write-up in the morning is my bias is currently bullish, but because I also had prepared that bear case, as soon as the market started breaking down in the morning, I was able to just ride it down. You guys saw the trade, made about 17, 18K, and then moved on with my life. Remember, it's just have your bull case, have your bear case. The idea is really to minimize your risk, ride the trend when possible, and it's just really a game of risk management time and time again. It's a game of reaction. It is not a game of prediction. If you're just joining in right now, first of all, you are late. Demerit. We've already been doing this for about an hour, but the key thing you need to know is Micron beat on earnings last night, offering a little bit of foundational support to the concept of the AI trade. And then fast forward to this morning, we got a lower than expected inflation report. November consumer prices rose at 2.7% annual rate, lower than expected, according to delayed data. So they were expecting 3.1. It came in at 2.7. That is a much cooler than anticipated inflation report. Generally, when it's off, it's by like 0.1, 0.2. This was lower than expected by 0.4. That is a big win for really the economy as it relates to inflation. And actually, in fact, it was such a big win that we saw the chances of rate cuts kind of changing a little bit right there. Now, granted, it's not the biggest move ever, but we did see a shift in the betting market. So I just want to bring that up. If you haven't already, sign up for the newsletter. It comes to your email inbox every single Sunday. Obviously, I have earnings. I do want to let you know that FedEx and Nike are reporting after the market closes today. In terms of macroeconomic reports, we have already had all the major things now of today, and there was a lot of them, but there's a lot going down tomorrow as well. So today is Friday number 1. Tomorrow is Friday number 2. For Friday number 2, not only are we getting another inflation report, we're also getting consumer sentiment. And on top of that, we're also getting monetary policy updates from the BOJ, the Bank of Japan. With respect to seasonality, yesterday was very bearish. Guess what happened? We had a very bearish day. Now, today it is leaning bearish, but at one point it was bullish. So it was kind of doing nothing. Then it was bullish. Recently it's bearish, which is why it's leaning bearish. But what I really want to point out is tomorrow, Friday number 2, December the 19th, is extremely bullish. In fact, with respect to individual days, it's one of the most singular bullish days from a seasonal perspective of the entire year. Is that a guarantee? No, but I am telling you, you have a 79% chance of tomorrow being a bullish day. The day itself, this is a look at the hypothetical equity curve you would have if you bought it open, sold it closed on the S&P 500 futures market. It would be absurdly bullish. You would have a return over $15,000 just by going long one ES contract, and you would have never really taken that much heat at all. But once again, if you want to sign up, this information is completely free. You've never had to pay for it. You never will. MattKohrs.locals.com. It's in the description of the video, and my mod will put it in chat. And most important, The fact that today is a beautiful Friday means it is a payday Friday. And since we're so close to the holidays, I figured why not make it a big one? Why not, instead of doing 5 prop accounts or 10 prop accounts, we're giving away 15 prop accounts. 5 for Apex, 5 for Funded Futures Network, and 5 for Vanquish. They're all running crazy good deals right now. You could take advantage of all these deals with that code Goonie. Here's Apex's 80% off. Funded Futures Network is 50% off and buy one, get one. And then on Vanquish with code Goonie, 50% off, and you get a free reset. So they're all running pretty gnarly deals. And of course, all the people who win one of these accounts, we're going to do a giant marble race. Winner takes all, prison rules, as in there are no rules. And we're just doing that to celebrate this beautiful Friday. So happy Payday Friday to all of you folks. And all you have to do to enter is like, retweet, and follow. It is free for all of you. Like, retweet. I see some people saying it's Thursday. You're stupid. Obviously, it's Friday #1. I don't know what you guys are talking about, but whatever. I guess you guys took your crazy pills this morning. And on that note, we have about 30 seconds to get going. About 30 seconds. We should probably put up Micron, but I also kind of want to watch Tesla because Tesla was having quite the run of it recently. I feel like we're going to be switching up the charts quite a bit this morning just because there's a lot going on. So if you see something moving like crazy, I mean, I see some people commenting Lulu. They had an announcement this morning, currently up 7.7%. So there's a lot going on. Dingity ding ding ding. The world's largest casino is now open. Best of luck to all. Play responsibly, and if not, have fun. And most importantly, happy Friday. Folks, if you haven't already, help your boy out. Hit that like button. Don't forget to subscribe. It looks like there's a couple thousand of you watching right now. So by my math, we should have about 5,000 to 10,000 likes. The fact that you guys aren't logging into your extra 10 rogue accounts and liking on every single account and promoting it to your grandma blows my mind. Honestly, the disrespect that goes on in this community, I don't think other streamers would put up with it. But it just so happens that you guys are lucky because I'm just a easygoing guy. Rarely freak out. Very calm, cool, collected head. The fact that I let you guys get away with this much, it's insane. It's insane. The benevolence that I show to this digital online community is next level. It really deeply is. The fact that I am this nice to all of you and this is how you treat me blows my mind. Absolutely blows my mind. What was I looking at? Nvidia's up 2%, Avago's up 1.6%, Tesla's up 3% and it's running. Palantir is up 3% and it's pushing. AMD's up 3.5% and it's pushing. Tesla's looking great. Palantir's looking great. Apple's looking red. That's a bit confusing. Google, not much. Oh, Meta's even good. Dude, look at that pump on Meta. Oracle. So Tesla's looking fun. We should have Tesla up. Micron was the report from yesterday, kind of saving all these other names. Nvidia was looking good, taking a little bit of a hit right now. AMD is going. That's actually a strong gain. AMD might be one of the biggest gains on my watch list right now. You have MSTR up 4.9%. Iron, kind of an AI play, up 8.5. Robinhood is up 6.6. CoreWeave's up 5.7. Oklow's up 5.5. Hut is up 10% after gaining a huge percent yesterday. DJT is actually up the most, so scratch that. All my commentary is wrong. Due to the new business merger with the Trump Media Group, the fusion play, getting into the world of energy, DJT is up quite a bit. I'm getting a breakout alert on Meta already early this morning right here. Meta trying to recover this cloud. It got hit, pumped up, pulled back, higher low, trying to break the 50 EMA. If it breaks above and closes above, that's a legitimate bullish sign there for Meta. A legitimate bullish sign. So if you're playing that in the short term, best of luck to you. Nvidia, I want to see it above 176. Broadcom, I want to see it above 347. Tesla at this point, if it keeps pushing, we're just seeing a new all-time high. Palantir, I want to see it above 187, 188. Apple is not looking good. I'm not liking the cut of the jib on Apple. Google, I'm waiting for it to recover so I can sell some puts. Meta is breaking out. Oracle getting hit but having a decent day. AMD trying to recover itself. Microsoft. So in terms of interesting plays, Tesla obviously turning heads. Palantir turning heads. Google, I'm waiting for a bit of a recovery. Do I just need to crossing? Why did it expire? All right, let me just, I guess, delete this. Why do my alerts always get deleted? Edit. No, I wanted to delete it. Come on. Edit, delete. Yes. I guess it's not doing anything for me. All right, it's going to be one of those days. Coming back to the market right here. Let me get this 1 minute. Like I said, we opened up at 80. Your first natural target, very evident, basically 6,800. It looks like it kind of undershot it at 96. Might be giving us a little retest. Honestly, it might just be a little bit of profit taking from people who swung overnight for the inflation report. And now all of a sudden, a little bit of profit taking. But maybe we get a higher low. I'm still looking for that test of 6,800. I feel like that's a pretty evident play if you ask me. Let me redraw this. We've already taken out the extended hours high. I always like to know these numbers. The overnight session high and low, we do take that out close to 90% of the time. You could see we already took out the high today on like the very first push. Literally in minute one, we took out that, but let's see if it can maybe establish a little bit of a base just sub 300. Looking at momentum, 5 minutes bullish, 10 minutes bullish, 30 minutes bullish on the S&P 500. With respect to the NASDAQ, 5 minute, 10 minute, 30 minute, all bullish. It looks like the breakout of 345 on NQ is a huge breakout. It's that 50 EMA on the 4 hour, and then we're already at that key level on ES. Is my big head blocking this? No, it's not, but it almost is. But I'm looking for the recovery of the 4 hour cloud on both ES and NQ. That would be a very good sign in my book for like, okay, we have a real shot to take out these previous highs. We put in a higher low on the daily, setting us up for that potential Santa Claus rally. All right, here's the 1 minute. Oh, I forgot to show you guys the flow on the day. All right, so the S&P 500 was strong, and I'm assuming some profit taking right now, and that's exactly it. Exactly my assumption. The blue lines are puts. No one's touching puts. We popped up till 931, 932, and after that, you have people locking in profits, selling their calls. Looking at the Mag 7, pretty much the same situation. Maybe it's people who don't want to play OPEX tomorrow. Remember, it's not just OPEX tomorrow. It is technically triple, quadruple witching. So yes, we have monthly expirations, but this particular month is the end of a quarter, and you get these 4 times a year, but tomorrow is quadruple witching. So basically it just means get prepared for larger ranges. Quadruple witching, I've done some extensive studies on this. It doesn't really skew bullish or bearish. It just skews high ranges, high volatility. So I just want to throw that out there. Thoughts on Top Step? I think it's absolute trash, and I think if you're using it, you're just honestly asking for trouble. I think it's proving to be one of the worst SIMDA-funded firms. I would not give them $1 of my money. The CEO is an asshat. The coaches all suck at their job. None of them are good traders. The platform is down more often than not. I don't even know. It's just not worth $1 of your hard-earned money. It really isn't, especially now. It'd be one thing if you had like 2 options back in the day when it was like Apex and Top Step, but now, since there's so much increased competition, I just don't think it's worth it whatsoever. But that's my own opinion. And maybe you agree with it. Maybe you disagree with it. I don't know. Do I have my trade copier set up properly today? I do. I think I do, at least. Who knows? All right, we're almost about to get the 10-minute Orbo. We're 7 minutes into the day. I like to pay attention to the 10-minute Orbo, especially if it's a breakout in the direction of the current momentum. And right now, the direction of the current momentum is clearly up. Bullish, bullish, bullish. Right here, bullish, bullish, bullish. So I'm waiting right here. The top right of your screen is the 10-minute chart. I'm watching the high and the low of the first 10 minutes on both ES and NQ. Kind of sets the tone for the day. Yes, statistically, the 30-minute Orbo is a bit more important, and more important than that is the initial balance. But hey, just while we're waiting for the chart to develop, it gives us something interesting to watch. Either the breakout or the breakdown of the first 10 minutes, and then from there we can watch the breakout of the breakdown of the first 30 minutes, and then from there it's the breakdown of the first hour, which is also referred to as initial balance. What we're seeing right now most likely is a clear amount of profit taking. It does seem to have recently stopped on the Mag 7. We had some bullishness, then we we had a lack of bullishness. This is people locking in their profits. And right now we're going flat, just waiting for the next move. Might be up, might be down. Your guess is as good as mine. And then looking at the S&P 500, we're seeing the exact same thing. There was a little bit of a pop. Then there was profit taking. No one is buying puts. I want to be clear. They're not buying puts. They're selling calls. So we're not adding negative delta. We're removing positive delta. It's people most likely locking in their profits. So as we're waiting to see what in the world is going on, we just got a little bit of a hit there on the Qs. I'm very curious to know which way this is going to break today. Tesla taking a little bit of a hit. So first 2 minutes were exciting. Now we're giving some back, but hang on. We have a lot of time left in the day, which is the perfect opportunity for you guys to like, retweet, and follow to get entered into today's enlarged Payday Friday. Happy Friday to all of you. All you have to do is like, retweet, and follow. You could go to my Twitter account at Matt_Kohrs. It's also pinned to the top of chat. It's also in the description of the video. Once again, all you have to do is like, retweet, and follow. Do those three things. Like, retweet, and follow. And we're not giving away 5. We're not giving away 10. We are giving away 15 prop accounts today, and we're even doing a larger marble race. So all 15 people selected, not only are you getting a prop account, but from there, you're all going to be put in a race. Winner takes all, prison rules, no rules. And basically, whoever's the first one to pass the finish line will happily have the bragging rights of being the fastest racer in all of the land. We'll be able to really don that crown of just ripping it up. So happy Friday to all of you, and most importantly, happy Payday Friday to all of you. They're talking about, oh wait, I want to know what they said on this deal. Lululemon, Nike, FedEx.
I want to know that Elito's worried about China. He doesn't have any clarity on China.
Yeah,
if he
Micron's
had more
crushing.
China and he had more innovation, which is what I'm counting on. It's the two eyes.
10-minute Orbo just broke south on ES and on
NQ.
NQ.
If you can get the two eyes going, the stock goes to 100 rather quickly. I think the stock has 3 downside and 20 upside. Not bad. Yeah. Not bad ratio.
To your point about restaurants, got an upgrade of Shack today. Maybe to your point about coming lower beef prices. MCD, by the way,
10-minute Orbo broke to the south, but not with trend. I didn't take the trade.
Yeah. Look, Shack is very interesting. The problem with Shack was the stock was going straight down. The analyst had it dead right, said sell. It was much more of a hand. It's very hard to wean yourself off.
It has seen far higher prices. Remember, it was brought to market, I'll never forget, by E.F. Hutton.
No, you're absolutely
that one I loved. E.F. Hutton brought it public, but they just bought it. Wasn't the old E.F. Hutton.
Brilliant.
Why am I telling you about it this morning? They're merging with a company that
This
does
is for DJT.
fusion power. It's called TAE. It is one of those companies that is pursuing fusion as a key power supply. Not fission, fusion. And I as we all would, of course, put it into ChatGPT and asked about fusion.
Why not Gemini?
I'm back, bitches.
I don't know. I went to chat. Remaining hurdles. Fusion must still produce net electricity, not just net fusion energy. Run continuously, not in short pulses. Survive extreme neutron bombardment. That's a problem. Yep. And be cost competitive with solar, wind, fission,
bounce in
and
DJT.
Gas. Likely timeline, according to chat, 2030s, the first pilot plants producing electricity, expensive and experimental. 2040s, early commercial fusion plants.
NVIDIA's
and
getting
in
rocked.
the second half of the century, we could have meaningful grid scale impact if
a lot of
costs
profit
fall.
taking this morning thus far.
Second half of the century.
Of the
of the current century.
Okay.
So that's
it's a massive shift in
fusion.
narrative.
It's always been huge promise. There have been technological hurdles that have been overcome. There are many more to come. And here I'm not quoting from
Are you
chat.
telling me it's a
I'm
switch
talking
from
about
media to megawatts?
Well, they're going to
It's
keep
up
running
32% and climbing.
But there's no cash. I mean, they are providing some cash at close of about $200 million, I think. Yeah. Agreement to provide up to $200 million of cash TAE at signing, and an additional $100 million available upon initial filing of the S4. it's moving the stock up. So yeah, when you buy DJT in the not too distant future, when they
Apple
close the deal,
and
it won't
Nvidia
just
are
be
getting
about
smoked
social media
this morning.
But David,
it will be about
look at that. Apple smoked.
No longer about crypto.
Nvidia smoked.
Sideshow now. It's incredibly capital
We got
intensive and
unfortunately
heavily
knocked into
regulated.
the transition zone. We might bounce at the 50% point, 765, but the bottom of the transition is 50. I'd prefer just a quick bounce out of this. I want to see the profit taking stop, but it's a lot right now.
Anthropic and see what's really going on.
Joanna Stern piece that Jim is referencing was in the Wall Street Journal. It is a great read about how Anthropic gave them a vending machine that was run by AI, and what those creative people at the Journal did with that poor thing is pretty funny.
Yeah, it just tells you how early we are in the MC. But I was actually asking all questions from Gemini of David's chat.
There's some video that they showed, and they were
quite on the video.
And that deal's not. I don't have. Did it ultimately come out illegal? Right. No, what it did is it cracked everything.
Feels like they're pretty much done with that. I thought they were going to have something a little bit more useful to say, but not only, it seems like everyone at CNBC is all a little bit confused about the DJT new partnership, the combined deal expected to close mid next year. It is DJT, the media company owned by the president, is now becoming the company's combining, and it seems like it's going to be a 50-50 split with a fusion company. It is a fusion company play. So the 10-minute Orbo did clearly break down, but not a whole heck of a lot. We're kind of right at that breakdown level. What was the breakdown? The breakdown was at 188, and we went as low as 172. So there was 16 points, but it was anti-trend, which I am not the biggest fan of, not in the slightest. But I wonder if it can take out 27 here, how that might play out. We'll see. Patience. We'll see. Maybe we're getting that 945 reversal. You know how it might be. Is it going to pump at all here today? Am I on the right one? I hope so. Let's really dial this price action in. Looking for a potential reversal here. We're testing the trend line now. A little bit of a smack, though. Once again, I'm really zoomed in. I'm on the 100 tick, as in every 100 trades. It's creating a new bar. So this is like degenerately zoomed in. I would by no means recommend anyone trade on this particular time frame. I'm just using it to, I don't know, spice up the show, give us all a little bit of cardiac activity as our hearts get going. But we came up to the trend line, smacked, not getting that 10-minute breakout. I'm looking at this previous high here, up 27. In fact, smacked at 20, knocked down already 30 points. So if you took that rejection there, not a bad deal. And it looks like the bombardment is not stopping. We popped for the first 2 minutes, and ever since then have not really been able to catch our footing. We're still waiting on the 30-minute. The 10-minute Orbos did break down. If you don't know what an Orbo is, opening range, breakout, breakdown. So you could apply it to whatever time frame you care about. So the 10-minute would just be the break of the first 10-minute high or low. And you can see right here, we wicked below it on both ES and on NQ. And now maybe we're potentially going up. Right here, we just made a fresh high. We did take out this previous high, so it got smacked hard. It got smacked from 20 all the way down to 80. That's a 40-point smack just for it to bounce anyway. This is kind of crazy, actually. So if you took that breakout, you most likely got smoked, even though if you waited 2 minutes, it would have gone in your favor, which just kind of gives you an idea of the ranges and the volatility of the day. We're moving today. Like I said, that was a legitimate breakout trade to take. You probably got smacked 20 points south, but had you been able to white knuckle this looked horrible. Swept that low, basically tied almost the low of the day, overshot it to the tune of 7 points. It almost hit the low, and then boom, rip. That's crazy. That's just nuts. Like, you got to get prepped up. So what does that tell you? That means either wait for volatility to calm down. Maybe you want to trade midday or later day because the opening session, we have ranges, which that's a double-edged sword. If you're on the right side of it, you make a lot of money and you make a lot of money quickly. However, if you're on the wrong side of it, you can obviously lose money very quickly. It does cut both ways. So what does that mean? It either means be patient and wait for those perfect setups, wait for later in the day, or you could just size down. Instead of trading a micro, or instead of trading a mini, you could trade micros. Remember, 10 micros equals 1 mini. So if you're generally trading a mini on ES or NQ, you could always cut your size in a half by trading 5 micros, or obviously less. Like, you could cut it by a 10th by trading 1 micro. So just be careful of these ranges. Be careful of the movement today, because it is getting quite whippy. Even that's a fake out breakout. So we had this little fake out breakout that ended up being a real breakout off the higher low. We pump all the way up. It goes from 179 up to 239. Golly. So we're expanding now. So we made a fresh high, but here we just made a fresh low, which is by far my least favorite trading setup. By far, when you have higher highs and lower lows, that's it's referred to as a microphone pattern. As you can see, it is an expanding pattern is probably a better way to think of it, because you got higher highs, but now you also have lower lows. So the market is not making up its decision. We're getting more bullish and simultaneously more bearish. So it is out of the 4 setups. There are exclusively 4 setups. You either have higher highs and higher lows, bullish. You have lower highs and lower lows, bearish. You have lower highs and higher lows, consolidation, or you have higher highs and lower lows, which is what we have right now, and that's that expanding microphone pattern. So those are the only 4 opportunities. Like, those are the 4 total combinations of what you could have. And this one right here, higher highs and lower lows, I would argue that the stats back it up, but on a personal opinion, I think it's the worst to trade, because not only are the ranges getting larger, so you don't know what to risk, but you don't even know who's in control, because you have both simultaneously higher highs and lower lows, as in the bulls are showing more strength and the bears are showing more strength. So whenever I see this setup, it for me, it just means, honestly, like, legitimately just wait. Because maybe you get lucky, and if you choose to trade it, hey, best of luck. I hope you crush it. I really, really do. But for me, when we're right here at 947, we're taking out the recent highs on the Qs. The SPY didn't. So the SPY is still legitimately bearish, at least since market open. But at the Qs here, we pumped higher and got hit lower. So I'm seeing bearishness on the 1 minute since market open on the SPY, and there was bearishness on the Qs. It attempted to recover, made that fresh high, made a fresh low. So it's kind of like that awkward in between. So for me, if you don't like it, you don't have to trade it. And I get it. I've been there myself, where you're like, well, I'm watching the market, and we all kind of get amped up about potential opportunities. And hey, if you do it, just keep your risk in control. Because remember, most of the time, especially in such a short time frame, obviously looking at like the 1 minute here, the next bar, the odds of the next bar being green or red is 50-50. It's almost perfectly 50-50, which means if you're getting into a trade, like, even if it's horrible trend, like, you still might be right. That might be the time that the trend switches or stalls out, this, that, or the other thing. So the important thing is not necessarily your trading model. Of course, that is important, but really your important thing is your risk management. If you get into a play and it goes a bit in your favor, especially if you're doing futures trading, sim-to-funded futures trading, just set your stop to break even. It'll make your life so much easier. It'll make your life so much easier. Maybe not the best tactic for like swing trading, for options trading, but if you're doing day trading on the futures market, there's no pattern day trading. You could trade as much as you want. You don't have to be in love with every trade, as in, no, I want to give it room to breathe. I want to give it room to breathe. If you are especially doing sim-to-funded day trading, whatever, set your stop to break even. If it runs, it runs. If not, worst case scenario is your break even. Markets going red, wouldn't be surprised. We're quite a far way away from going red. I mean, the SPY would have to drop $5 and the Qs would have to drop 7.8. So could it happen? Yes, but the odds of us going red today are very low. So not impossible. I'm not going to sit here and be like, we literally cannot go red. Of course we could go red, but we've had too much good news. It's too much of a gap up. The odds of it are very, very low. And in fact, if you want the specific odds, you would just look at the 0 DTE delta reading on the puts for the closest strike to the closing value. And that's your odds of us even testing it. It's not likely. So I won't say here and say it's impossible, because when it comes to the market, anything is possible. But what we're seeing here, people aren't getting bearish. I cannot stress this enough. Why I think we're going to bounce is because no one's touching puts. They were locking in their profits on calls. So what we're seeing, this hit to the market, it's not bearishness. It's a lack of bullishness. People are locking in their profits. They're not actively betting against the market. The market is clearly telling us, big money is telling us, people currently aren't interested in sending the market lower with puts in that anticipation. What they're saying is, wow, we've gapped up so much, we might as well lock in some of these bullish profits. So, of course, that can change on a moment's notice. But look at this. The Mag 7's already ripping. The SPY is recovering. No one was touching puts. This is why you guys should get on Spot Gamma, because you could see the same thing. No one was touching puts. They were locking in calls. Like that, there, in my mind, there's a big difference between going down because of increased bearishness versus going down because of lack of bullishness. Of course, going down is going down and price is price. But in terms of how aggressively you do want to chase it, or maybe the likelihood of a reversal, that changes, at least in my book, based on understanding why we're actually going down. Matt, I often hear you say you made too much money. Is this part of the SIM to funded accounts or just your personal strategy? No, it's exclusively the SIM to funded, because they have consistency rules. So you don't want one singular day counting for too much of your profits on certain firms. That is not a widespread rule, but a lot of the most popular firms do have those rules. So it's something to consider. Something to consider. Wow, that's a big risk. That is a big risk. So I'm already seeing NVIDIA have a nice recovery. Apple, not so much. Meta, Palantir is popping. Tesla is also now popping. Avago is flat. All right, so the only one really not joining the party is Apple. Dude, DJT is moving, 34% gain. Oracle's up, AMD. Yeah, the only party pooper at the moment, and of course this could change, is currently Apple. But NVIDIA, nice recovery. Tesla, nice recovery. Tesla's still right there in the world of a new all-time high. Not sure if I missed your thoughts, but what about MSOS and EO News? I have no clue, and they sound like small companies, so I probably just don't give a shit about it. Is Spot Gamma running a deal right now? Yeah, if you go to the description of the video, you could get 80% off. We're the only community they offer that to. Basically, I negotiated a deal with them, and because they like you guys so much, you can get 80% off with that code Kohrs. It's pinned to the, actually my mod just put in chat, but it's also in the description of the video. So you could test it out and see if you like it for a huge discount. And if you like it, great, keep it. If not, it only costs you a little bit of money, and basically there's just not much risk to you. But I don't understand right now with the popularity of trading options. I don't know how you could trade without knowing options flow, because it just gives too much information. How did I call out a likelihood of a bounce? Well, because I was able to say, oh, wow, no one's buying puts. They're just getting out of calls. So as soon as this call selling ends, well, we could pop from there and look at what's happened to price. We've already gotten a nice pop. So right there, that one call out, that one piece of information, honestly, if you played it properly, would have paid for you to have Spot Gamma potentially for years. And that's just like from using it for one day. MSOS is an ETF. EO is an executive order on cannabis. Yep, don't care. That's a political play. How, like, I'm not going to have an edge predicting politics and like how the market's going to react to it. It's hard enough to have an edge otherwise, and that's exclusively in the realm of politics. So if you're in it, I hope it makes you money. I'm not against it. It's just when it comes to me and my personal trading, I want an edge. Like, I want something that I can like actually base stuff off of. And if you're talking about that ETF or an individual company such like Tilray or Canopy Growth or any of those, it's only politics. It's like, which way will the political decision go? I don't know. And maybe you have a better read on politics. Maybe you personally have an edge there. I just don't. I don't have, I mean, if I had to just arbitrarily guess on, hang on. Hang on one quick second. Do I want to trade this?
Order submitted. Order
Dude,
filled.
Super delayed.
Order submitted.
Wow, dude, I just got some of the worst slippage, like almost 10 points of slippage. It was, what the fuck happened? I bet there's a better way I could have placed that order. I just got goosed on that one. Fuck, dude. I'm like 10 points off where I wanted to be on that bad mamma jamma. Oh, okay. So we had the 10-minute Orbo breakdown. I'm watching ES up here, 50. NQ's up here, 329. 329. Oh.
Order submitted.
I'm front running that target right here. I'm bullish into this play. 329. I should have been in at 60. I got to fill at 70. I'm trying to figure out how much room I really want to give this. I could have moved the stop to break even. Had I already had the play at 60 where I wanted the fill, I would have moved it to that. But right now, because of the structure, I almost have to use 34. My target, as you can see, is right under the intraday high, just in case people front run it. But really what I want to do is hopefully we bounce out of this dip very quickly, and then I can move my risk to whatever this low is, which would effectively just be like close to my break even. We'll see though. We'll give it a shot. We'll give it an old college try. I like the Mag 7 recovery. I like the SPY. Well, I was liking the SPY recovery. Just got a little hit there. A little bit more call selling just started to happen at 9:58. So let's hope that this 10 a.m. Change of the hour doesn't somehow fuck me over. We'll see. We'll see. We're bouncing out of it. If we take out 91, I have the option to either go to break even or a little bit. Really, I want to see it take out 300. Do we have a huge... No, there isn't a huge amount of sellers. I mean, there's sellers here we just ran into at 95-ish. But I'm looking for it to take out 300. All right. Stops at break even. It's a freebie play for me. It's a freebie play for your boy. I could do 65. So I could be only risking $100 because that is the swing low. But then like there's the psychological argument of being green on the day. You know what? I like the psychological argument. Hope like it easily could get rejected here at 300. And I hope it doesn't happen. I hope I get lucky and it just pumps and we're going to see how it's going to go. There's going to be a little bit of luck to this of just hoping that 300 isn't like extreme resistance. Obviously, people will be reacting to that psychological level, but maybe I can get lucky here. I do like that flow. SPX. I am kind of targeting 6,800. The intraday high thus far is 6,796. 6,796. So an overshoot of that, 3 to 4 points. Fuck. It almost wicked me out. I don't have the best vibes on this one. Oh, I feel like it's going to go. It's just how much risk do I want to take for that? And as of right now, I'm taking no risk. So I need this succession of higher lows to hold. Basically, I need 73.25 to hold. All right, let's go up to 72. All right. Once again, to clarify, worst case situation for me is a small profit. I want to be very, very clear on that. And I'm just trying to be respectful of the fact that we could get smacked at 300, but really the larger play is this. I'm looking for the SPY to go to the intraday high. I'm looking for the Qs to go to the intraday high. I'm looking for SPY to actually overshoot and tag 6,800. I'm looking for the Qs right here. We're recovering at 84. I'm looking for this pump up to the high that we got in minute 2 of the trading session. I do strongly believe it happens. It's just a question of when might it happen, and I might just be off on time because it actually almost clocked me there. Maybe I get lucky. Maybe we somehow get a magic reversal and I don't get tagged. But when it comes to just pure luck like that, I find that I'm not the luckiest guy. So I'm giving myself a shot, but I cannot emphasize this enough. I'm giving myself a shot with no risk. My stop is already in the money. So I might get tagged here. Literally just got tagged.
Order canceled.
Whatever. I made money. It got tagged at 300. Had I played multiple contracts, I probably could have just unloaded one at 300 and done the other to break even. That's a fair argument. But I was trying to be mindful of the fact that I already got that shit fill. Fuck. Yeah, it wicked me out. How do I want to play this? Do I want to re-enter? Or do I want to give it another cycle? I don't mind that at all. I feel like I made the right decision because when it took me out, it easily could have come for a 50% retracement and I was in at 70. So maybe I could have gotten a new fill at 50, saving myself 20 points. I'm very happy with the decision that I made because I was just obviously protecting my accounts. Remember, it's all about risk management. The profits will come to you. I strongly believe we're going to a new intraday high. It's just a question of when and can I take advantage of it with lower risk. Here's Mag 7's looking strong. SPY is also looking strong, taking a little bit of a hit there. Yeah, a little bit range bound. So I'm just trying to give it a second to breathe. Maybe I could get a better fill. And hey, if I can't get a better fill, I already got my green trading day on the day. All I needed was, well, technically this one didn't. I think that account needed 20 more bucks. But as long as you have a profitable day is $50, that counts as a green day. Oh, that counts as a green day. So I'm happy with it. Just, I didn't get the break. You never know when the break is or isn't coming. So I don't mind it in the slightest. Kind of watching this trend line. Maybe. We are moving today. Oh, decisions. It is past the 10 a.m. hour. Bullish, trying to break out. Bullish, trying to test. The flow is strong. I just need the price structure to set up in a way that I like, because other than that, I like the bullish play right now based on momentum and structure. Even options flow is looking pretty solid. I just need to see if I can get in with lower risk. And remember when I said I'm happy to get out for break even because I might be able to pick it up at 50? Look at what's playing out. Now, of course, there is another universe in which I get knocked out, it rips from there, and it goes right to my target. Yes, that is possible. But don't focus on the woulda, coulda, shoulda if it goes right. Focus on the woulda, coulda, shoulda if it goes wrong. And my focus here was, oh, if I get knocked out for break even, it might come back to this area of support, and then all of a sudden I'm underwater by 20 points, aka $400. When why do that when I could actually just save myself at green, and then if it recovers, I'll play the recovery. If it breaks down, okay, I avoided stepping on a landmine. And I wonder if this is coming for the trend line break. I wonder. I like it. I'm actually really happy with how I played that. You just never know the next bar. You never know the next bar. Folks, remember, we are doing a Payday Friday. Payday Friday. Like, retweet, and follow. Pinned to the top of chat in the description of the video. Like I said, it's free for all of you. Like, retweet, and follow. We're giving away not 5, not 10, but 15 prop accounts. And we're also doing a race to find the fastest marble racer in all of the land. It is free for all of you. There's no like gimmicks or anything like here. All you have to do is like, retweet, and follow, and then that will put you in the drawing, and we're going to be picking these people. So if you've been here on Payday Fridays before, you know how to do it. But once again, we're just celebrating a nice Payday Friday. We're just celebrating a nice Payday Friday. Hang on. I'm really trying to pinpoint this entry. I'm not happy with the fact that I had 10 points of slippage on the first one, so I'm trying to be very methodical about this next one. What is it? It is 10:08. I don't mind trading at 10:08. Bullish, bullish. What are we getting here? Whoa. Whoa. How did I lose my cloud? Can I do Control Z? Okay, there we go. You can do Control Z. Whoa, a little bit of a sweep there. A little bit of a sweep, folks. A little bit of a sweep for sure. VWAP is all the way down here at 162. So if this push were to collapse, my natural target would be somewhere between 180 and 160. If this were to collapse, which I don't think it will, but if it were, that would be my target. Yeah, because, I mean, look at that. We popped up, we pulled back. This is actually probably a beautiful trend line to play. Why can't I? Oh, sorry. Nope, I did not mean to do that. Sorry, wrong hotkey. I'd be watching this structure right about there. A little bit of a flag breakout, a little bit of a bull flag breakout is what I'd be honing in on. Obviously, the high at market open to the high we just made. You could also easily see this on these charts. Let's go to the 5-minute on this. It'll probably make our life a little bit easier. I cannot explain how happy I am with the decisions that I made. Remember, trading isn't about, of course, the end result. The goal is clearly to make money, but then the question is, what's the best way to make money on a risk-adjusted basis? And I would argue that the best way to make money on a risk-adjusted basis isn't to be hell-bent on focusing on winning every trade. It's to be focusing on, did you make a good decision on every trade? So I took a stab at the market today, right here. You could probably see it right there. I got in on this breakout. I tried to get in earlier around 60 for whatever reason. This must have happened really fast. I got a pretty shitty fill. I wrote it up. Do I wish I had 2 contracts and I unloaded one at 300, the other one break even? Yeah, but I didn't feel like taking on that risk of double contracts today. So instead, I just did 1 contract. And as soon as it went a bit in my favor, pulled back in my favor again, I said, okay, cool. Stop to break even, head it to break even, and it hit. Had I been holding on to this, I would now be underwater by 60-ish points, and that would be 1.2K. So why do you always protect yourself? Why do you always assume it's going to go wrong? Because sometimes it does go wrong. And mathematically, taking a loss is a bigger impact than on your account rather than having the equal-sized win. So as much as, yeah, I theoretically took on the risk of where I got knocked out at break even, that it could have easily bounced, ripped, and gone to my target, and I would have missed out on that profit. Okay, yeah, woulda, coulda, shoulda. But I took on this chance of, but what if it goes wrong? I'm still green on the day, and I'm right now not underwater by $1,400. I was long at 70. It's at 200. That's 70 points. Each point is $20. $1,400 per account. I would currently be in the red. So time and time, if you take one thing away from this show, I very much hope that it's just the best traders are not the best traders. They are the best risk managers. That is what the best trader is. By definition, the best trader is the person who can survive this marathon, this game the longest, to keep getting exposure to the market for that trade every so often that goes magically in your favor by a lot. That's the name of this game. So really, to be the best trader, you have to be the best risk manager. So that should always be your emphasis. And I get it. That's when it comes back to the quote unquote discipline part of trading of like, hey, do you have it? Yeah. Cause I'm not perfect. I'll be the first one to let you guys know that like, there's those times where you're like, oh, like let's size up today. Let's do this. Let's play larger. Let's play that shit always happens. And that's really what the battle of trading is day to day when you're there, like actually engaging in the markets. It's just everything in your willpower to stay disciplined, to keep your risk acceptable, and to stick to your trading system. The actual knowledge that you have to have about trading of like, what is a futures contract? What are the gamma levels? What are the delta levels? None of that is that complicated. Trading in itself of what you have to know from a knowledge base is not that hard. The difficult part, and anyone who's been trading for any amount of time will agree with this, the difficult part is having the personal resolve to stick to doing to exactly what you know you should do. Without a doubt. But we just put in a lower high and we are rapidly racing to the intraday low. So it looks like we undershot the 6,800 level on SPX. Right here, we got all the way up to 6,793 and just too much profit taking leading to the right here. So there's a bunch of profit taking on calls. Then people bought calls. Then there was even more profit taking. And this time around, it's getting a bit more extreme because people are also now buying puts. They started buying puts at that potential rejection at 6,800. I can't blame them. They played it with small risk right here. I can't blame either side, honestly. We recovered to a key technical, psychological, and gamma level. The bull started to take their profit. The bear started to put in reversion trades, and it ended up working out for them. We came up here. It got a little bit questionable. Someone started to smack it at 10.09, and they were probably using either the intraday risk or 6,800. They took on minimal risk for the potential reward of the intraday low or breakdown and more. So once again, from a risk reward perspective, I get the play. I'm not stoked about it because it stopped me from making all my money on the day, honestly, but I get it. I get exactly why the puts started to step in where they did. I understand securing the profits on calls. It's just, I get it. I'm not happy about it, but I don't think the play in itself is confusing. The 5-minute is bullish, but really sideways choppy. The 10-minute, we broke down, popped back up, did not make a fresh high, and now we are once again pushing on the bottom of the 10-minute Orbo right here, these horizontal lines. And then on NQ, same situation. Even though we're bullish, we broke below, we tried to recover. The recovery was, as of now, not so good. And now we're just at the bottom of that 10-minute Orbo once again. So, of course, you could look for the reversal right here. It wouldn't right here when on the 5-minute chart on NQ, see how we bounce off the 50 EMA. I wouldn't be surprised if we do it again. You could look for the reversal above 243. Same thing on ES. We sold off right to the 50 EMA on the 5-minute, looking for a potential bounce. Of course, it might break. I would say I give it a 60-40 shot. So none of it's ever guaranteed, but I would say, okay, 60% chance we break or bounce, 40% we break down. Why I say 60-40 is generally the market really showcases trend following. So as in whichever way you're going, you most likely keep going that way. But because it's not a guarantee, instead of being 50-50, I'm giving it a 60-40. I see bullish, bullish, bullish. Okay, cool. I see bullish, bullish, bullish. All right, cool. So once again, that is when I say 50-50, that's like, okay, the next minute or something like that. But if you're looking for the general continuation, most of the time the market is trending. Every so often you have a trend reversal. So obviously something to consider. But actually now let's watch for the 30-minute Orbo. So the 10-minute Orbo on the S&P 500 and on the NASDAQ both broke to the south side, to the bear side. And we have, well, now at any moment, we might break the 30-minute Orbo. So in the bottom left of your screen, this is a 30-minute chart. Obviously, I marked out the high and the low for the NASDAQ. I did the same thing on ES right here. So basically, if we push the intraday low that we made at around 945-ish, that is not only did the 10-minute Orbo break to the south side, but that means the 30-minute Orbo broke to the south side, and that is increasing the likelihood of a potential bearish leaning day. But time will tell. And as to my position, the first one where I did make a little bit of money, I would be down almost 100 points. So if I held that just blindly, I'd be down 2K per account, which a couple months ago, that would be a classic Matt trade. And I'd be here like lamenting. I'd be like yelling at you guys. I'd be yelling at everyone. I'd be like, what do you mean? Like the Delta flow strong. Who is selling? What's going on here with the SPY? Why the hell are so many people getting out of calls? Like I'd be so mad at this reversal. And really, I'd just be mad at myself for not having good risk management. How do you feel about using the 15-minute Orbo? It's all good. Once again, there's no such thing as the end-all, be-all. It's kind of using various ones in confluence. So that's why I brought up the 10-minute and the 30-minute. If you care about the 15, yeah, use the 10, the 15, and the 30. The more pieces of information like leaning in one direction or the other, you can be more confident about that direction. It's not like the 15-minute Orbo in itself is the end all be all, but that's true about any Orbo. But all of a sudden, you could have a stronger confidence in a directional play if the 10, the 15, and the 30 all break in the same direction. Like that. The same thing with, I get asked that generically in time frames of like, oh, what do you care about? Like the 1 minute, the 3 minute, the 5 minute. No one time frame is better or worse than the other, especially if you're talking about a time frame sub the daily chart. If you're like, there's not much of a statistical improvement comparing the 1 minute to the 3 minute to the 5 minute to the 10 minute to the 15 to the 30 to the hour to the 2 hour to the 4 hour. It's not like one has better information. What you can do and where your odds really start to increase, where you could develop your edge, is actually by looking at multiples, which is why I look at the 5 minute, the 10 minute, the 30 hour, the 4 hour. I also look at the 1 hour. I also look at the 5,000 tick. Like I consume as many time frames as I can because I want to see what all the time frames are telling me. And in my book, the best setup is where all your medium to larger time frames agree for whatever realm of trading you're in. So maybe to you the larger time frame is the daily, maybe to someone else it's the 15-minute, but like just generically follow me on this. If all your medium to larger time frames are in agreement, and then the smallest of your time frames is the opposite and then starts to break back in favor of the larger time frame. So let's just use a crude example. Let's say your 5 minute, 10 minute, and 15 minute are all pushing bullish. Your 1 minute is pushing bearish. It bottoms, starts to curl back in the favor of bullishness, as in agreeing with the 5 minute, the 10 minute, and the 15 minute. That is the point that I love, because you're now getting agreement across all the time frames that you care about. You're entering it at a point where you have minimal risk because you're catching that curl and you're risking the recent extreme, so just that low, and you're still trading with trend, where I would give you that 60-40 like generic edge. So when I say there's no particular time frame, no, one by itself is not the end all be all, in my opinion. But I do believe that using a cohort of them together is probably the best way to approach the market. Speaking of which, we have lower highs, but we still have higher lows as well. Technically, it's a little early to draw this trend line, but I guess you could theoretically watch it. I'm saying it's whoa. What was that? I'm saying it's a bit early because we didn't even try to attempt to bounce yet. But right here, we're getting close. I don't necessarily want to chase it to the downside because momentum's still bullish, and we did legitimately get a good CPI report. I'm not seeing the Mag 7 really dive. The SPY did dive, and there was some put buying. It was mostly call selling. So I'm still getting some conflicting pieces of information, which is why I'm not chasing it to the downside. However, I'd be more than willing to take shorts if the momentum was bearish, 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 if the momentum was bearish, bearish, bearish. If we had a bad CPI report, if the Mag 7 was vomiting, I'd be more than willing to take shorts right now. But to me, the price action we're seeing is not necessarily in alignment with my perception of the inflation report, which is probably the weakest argument, but more importantly, the current momentum of not only price action, but also the current momentum of options flow. I'm seeing some weird mismatches, and when I see mismatches, okay, that just means just wait. Just wait, just wait, just wait. And as someone in chat's pointing out right now, yeah, this could just be a VWAP bounce. So like, I don't necessarily want to be shorting right here because like maybe this is as close as it gets. As we got very close on SPX to 6,800, but we undershot it by like 4 points. This VWAP bounce, we don't have to touch it. We got generically within this range. And look at that. Had I shorted it, I'd probably already be blown out. And then I'd be yelling. I'd be like, why in the fuck was I shorting when all the momentum was bullish, bullish, bullish? Like, it just doesn't make sense. So it's okay. If you're seeing mismatches, just don't do anything. Wait till the picture becomes a bit more clear for you and your system. Matt, do you still see Avago down to gap? Still see it? Yeah, it could happen. See, I don't really understand those questions. Could it happen? What do you want me to say? Yes. Like, okay, there's a gap. Yeah, the gap could get filled. There's a non-0% chance that that gap could get filled. But the market, in here, there's a lot of people always asking the wrong question. The wrong question is those types of predictions. The right question is reaction. The right question, if you wanted to play Avago right now and you're saying, okay, here's my trade plan. I see a downside gap fill to 308 and I'm risking 347, trading at 326. Is that risk reward worth it? The right questions have to deal with reacting to the current conditions, not predicting what's going to happen next. And too many retail traders are always trying to predict. Could the downside gap fill get hit? Yes. And also simultaneously, the market could pop from here. Avago breaks out of 347 and we rip and we hit the upside gap fill. There's too many retail traders like who are literally never asking the right question. Never asking the right question. The right question for active trading, especially day trading, is a game of reaction. Do I like the trend? Do I like mean reversion? Do I accept the current risk to reward setup? It's not like, do you think it's going to go here? Yeah, whatever. You can always say whatever you want to support your bias. You can always do that. So it's just not helpful. It's not necessarily detrimental unless you're like being so undisciplined that you're not following the risk you should be following. But it's just the wrong question. If your questions relate to predictions, that's fun. It's not necessarily wrong, but it's not going to get you anywhere trading. Matt, is it truly Friday? Of course it is. It's Friday number 1. What are you guys talking about? I'm getting a lot of weird pushback about it being a Payday Friday. And do you guys know how to tell the time? Do you know how to look at a calendar? I don't necessarily know how to respond to you folks because it seems as if you're missing some very, very important stuff about maybe you didn't go to first grade. Maybe you don't know how to like look at a clock. But yes, it is Friday. That's why it's Payday Friday. I hereby decree it is Payday Friday. And by that definition, it means it is true. It's not Friday. It's not Friday. Well, why are other people in chat saying it's Friday then? So for the people who are screaming, trying to convince me that it's not Friday, why do I think it's Friday and why do other people in chat think it's Friday? Answer me that. To all the Friday naysayers in here, the onus is kind of now on you because there's this large cohort, including myself, who clearly understand that it's Friday. So what are you saying to that? What in the world is your rebuttal to that? We are getting a potential trendline breakout on SPY and on QQQ. Unfortunately, it's not really giving the best entry opportunity. This was kind of like an up and away breakout. Not much of a reasonable pullback. If you were degenerate, you could have chased it at 230 and you would be up 60 points right now. But there wasn't much of an entry on this pump. It was just kind of straight up. I mean, if you did it, congrats. Yeah, the Mag 7. This is why I said I'm not chasing it to the downside. So for all the people who tried to play the breakdown, I mean, I think the mismatch was kind of the sign in itself of why you didn't do it. So at this point, had I held my position, I would actually be up. I was in at 272. I would be up a good 40-ish points. But look at the smoke I had to take from 272 all the way down to, I would have had to take 100 points of smoke. I'm not willing, dude. I'm happy to cook it up in the kitchen, but that, like, it's just not reasonable risk reward. It just simply is not. So as much as like that would have been sick to get in, I more so wish that I just arbitrarily got in somewhere down here because I'd already be making my money in the day. So like I said, my target, you guys saw my target was at 25. It's about to hit. I told you I was very confident that's going to get hit. The question is just, was it going to get hit at the time I wanted to? And boom, I would have already hit it. Like I said, I predicted that this would happen. Predicted. Really, I was attempting to react to, I see these key levels, I see risk reward, and I reacted to the point of, I don't feel like taking on any risk. So as much as I predicted, this prediction is right. The question is, does it help you actually in trading? And for me, I made the right decision to protect myself because I didn't have to withstand this 100-point pullback. And yes, the prediction was right, in air quotes, but this is a game of reaction and risk management. And as much as I like am quote unquote kicking myself now because I'd be able to make my profits, was it worth that drawdown? No, it was not worth that drawdown. Just simply not worth it. So it happens and you survive to take on another trade. But does it sting a little? Yeah, it stings a little. But you know what else stings? Also taking that 2K fucking loss. That would also really, really sting. But nice technical breakout on SPY, QQQ, NVIDIA. Is Apple finally bouncing? A little. Apple's been the negative Nancy of the day, for sure. And the positive Pete of the day has been DJT, currently up 35%. Look at all that pump. Look at that pumpening. Look at that pumpening. Look, would you? Yeah, we're going right to that 6,800. All right. Should you be chasing it here? In my opinion, no, because your risk, the recent swing low is 30 points below you and you're buying it long at a key level. Maybe it breaks out and rips, maybe, or maybe it gets rejected. You top tick your long position and we could get smacked all the way back down. So I don't know what's going to happen. Like I said, I give it a 60-40 chance. I think it's more likely that we go up, but 40% of the time you're top ticking along and you're getting screwed over. Like it's not worth it. For clarity, price action going down in absence of put buying is what led you to remain bullish. Yeah, I shouldn't say it allowed me to say bullish, but it made it so I wasn't hopping on the bearish train because something wasn't adding up. Price was going down, but there was a mismatch because it was only going down to call selling. It was going down. Price action appeared to be bearish, as in selling off. But when you looked at the options market, it wasn't because of bearishness, i.e. buying of puts. It was a lack of bullish, i.e. selling calls. So for me, that mismatch said, oh, I don't want to chase it to the downside because there's a mismatch. Now, of course, it could have kept going down. That's totally possible. But there wasn't enough of an alignment on the trade for me to enter it. And then on top of that, to make matters worse, all the momentum was bullish. 5-minute, 10-minute, 30-minute, all bullish. 5-minute, 10-minute, 30-minute, all bullish. So by the time I looked at price action momentum and I looked at the mismatch on options, that is exactly why I did not chase it to the downside, and I gave it a 60-40 shot of bouncing. Now, for me, a 60-40 shot's a big call out because most of the time the market is 50-50. So the fact that I even gave it a 10% edge that it would likely bounce, in my book, that's actually like a big statistical chance because generally you're just not like ever skewing that far away from 50-50 opportunities when it comes to trading. Like you're just simply not. So when it came down like here, like it was a higher low and yeah, it could have got smacked. It was range bound. We're trying to break that range now. But there was too much of a mismatch. The Mag 7 flow was strong. We saw call selling on the SPY. Momentum was all bullish. There was no way I was chasing it to the downside. No way. No way. I would want to see all the momentum being bearish. I would want to see the Mag 7 selling off. It's just across the board. You're looking for agreement. You're looking for agreement. And that one was more so agreeing bullish. And the only thing that didn't agree was the price itself was selling off for a couple minutes there. About 10, 15 minutes of selling off. We're right at 800. I was about to go long, but I don't want to go long right here. I mean, granted, I don't know. I was thinking about going long at 24. I could have risked 308, but they might want to reevaluate 300. So that would have been like a 15-ish point hit, a $300 hit if I were wrong. And then when I put that together with the fact that SPX is at 6,800, generally you don't get nice smooth breaks on the first attempt. Of course it could happen, and for all I know this might just be a great setup to rip to 25, but I would rather just be a bit more patient. Maybe we overshoot it, pull it back, and I could get in on the next pullback. And the other option is it just goes without me, and whatever, c'est la vie. That perspective changed my trading, taking 50-50, expecting a loss, but keeping them small, allowing winners to overrun the losers. That's the best way to day trade. I understand that there's all these fucking weird ass people who are like, you got to trade the fair value gaps, the inverted fair value gaps, the PD array, the change in state delivery. It's the algorithm, man, the algorithm, this, that. No, what? Shut up. All those people, you know what's crazy is all those people sound fancy because they're using terms that you've probably never heard of, and they like to dress it up in over complexity, and that's cool and all. But the insane thing is they're all net losers. None of them are making money. So like, as fancy as it sounds, ask yourself, what's the point in learning all of that gibberish if they're losing money? You're just learning another way to not be profitable? Or like, I guess I just approach it with this game of like Occam's razor. A little bit of statistical research will tell you anything sub the daily time frame is pretty much 50-50. As in, if you're looking at the 1 minute, the 3 minute, the 5, the 10, the 15, the 30, the hour, the 4 hour, all those time frames, the chances of the next bar being green or red, going up or down, is almost perfectly 50-50. I'm saying there's not even a percent of error. It's like maybe 0.3% of error. Like, that's how close to 50-50 it is. So as much as people very much want to be able to explain price movement with this perfect mathematical puzzle, at the end of the day, there's too much noise because of the amount of people trading. Those are all unknown variables, whether it's other retail traders, hedge funds, high frequency traders, market makers, people making mistakes, code running, like, you just don't know. Those are unknown variables. So unless you know those, you can't predict it. So what's the point in it saying, look, oh, my fucking strategy works? And like, no, good strategies are basically, you just boil them down to the fact of they just have good risk management. That's what a good strategy is. Like, honestly, if you said my strategy is flipping a coin for heads or tails, I bet you could actually make money off that if you have good risk management. Matt, why do you feel the need to shit on other trading YouTubers like that? Everyone has their own system. If this whole fair value gap is their system, who are you to judge? Oh, easy. I'm the person who can do basic statistical analysis and realize you're losing money. Who am I to judge? This is a game. This is not a subjective game. This is an objective game. You can test it and you can realize you're going to lose money. So who am I to judge? I don't know, a person with a basic competency for mathematical analysis, a person who studied computer science and statistics, a person who has gotten almost $500,000 in payouts this year. Like that, I'm that guy. I don't know. Like, what do you mean? Like this fucking, hey, like, let's hold hands and sing Kumbaya. You're losing money. The stats of it show you're going to lose money. People do it in real time and they lose money. And then all of a sudden I get the, this guy made money, that guy made money. Dude, they're pointing out to like 4 to 5 people who've gotten payouts when there's tens of thousands of people who have attempted this strategy. So ask yourself, do you like those odds? If I came to you and said, I'm teaching my system to 100,000 people, and then yet only 5 of them have proven to be profitable, do you like those odds? Do you think that's a good system? I would never do the fair value gap personally. But you don't know they aren't making money. Yeah, we do, because you can see the payouts. Just because you make money doesn't mean you think they aren't. You think, dude, you can backtest it. We all have the same data to the market. This is one of those things that it's not even in question. We all have the same data to the market. We all can understand this quote unquote system. You can apply the trading strategy to the data and you're going to realize you're losing money. You're trying to act as if this isn't perfectly measured. You're not attacking it with the Socratic method. You're not attacking it like a scientist. You're not attacking it like an engineer. This is a cold, emotionless thing. This isn't, this, that. Dude, we can backtest it. If you are trading any of ICT, like just perpetually, perfectly, like a system, you will lose money. If you have an algorithm that perfectly trades ICT for you, you will lose money. It's been back tested. There's not even, to people who understand statistics and can do this, it's not even questioned. And you might be sounding like, I don't know about that, man. Think about it this way. If it were that good, everyone would have just automated it and they would have been trading it all of the time. The reason why there's not just perfect bots running ICT, making apparently free, unlimited money, is because it doesn't work. This idea of just like, oh no, it's like, that's an opinion, man. It's not a fucking opinion. It's not an opinion. We're talking about math. Like, that statement is as stupid as saying, I'm here saying 2 + 2 = 4. And you're saying, I don't know, man. Have you considered that maybe 2 + 2 actually equals 3? It's not an opinion. We are in the world of objective empirical measurements. That's what this world is. And then they're like, fuck, man. Like, it's just, but maybe, no. Like, literally, that's it. It's that clear. And how do you, like, I actually get frustrated because I don't know how people are so fucking stupid to fall for this. I really don't understand what's going on in this world that people are so susceptible to falling for the dumbest shit that we've ever fucking heard of. But they are. They just, I guess it's just because you want it to be true, but it just isn't. Sorry. I mean, I guess if that hurts your feelings, I kind of just don't give a fuck because I have to care about the other people who are here to actually learn about trading, to like actually approach the markets in a way that will be beneficial for them, like financially advantageous and not at risk of blowing out. And I'm telling you, all these fucking dipshits that trade ICT, there are people who have gotten payouts. There are people who are net profitable. They are few and far between. The odds of it are literally sub 5 by maybe hundreds of thousands of people who have attempted it, which tells me that they're just doing something different, because if it was a perfect repeatable system, they would all be doing it and they would all be making money. There wouldn't be that wishy-washy of like gut feel in the middle. It's not a profitable system. And like the point is it's so easily measured to prove that it's not profitable, and yet you have all these fucktards who are telling you that it is, and it's just the dumbest shit ever. But okay, here's maybe one story that will like really drive this home to you, and who I don't even know at this point. I think that person must have left. But for the rest of you, because I'm here in New York City, we just took out that high on SPY. I'm here in New York City, and obviously as a person who has the privilege of having a larger audience, whenever these sim-funded firms come to town, they like, I go out to dinner with them and the other traders and blah, blah, blah. And this isn't one. This is like a handful of firms. I like to broach the subject of ICT in this. Like, hand up to God, I have been told that from these firms, like the people who make money off you blowing out, they love ICT. And like, I was kind of confused when they first explained that to me. They're like, no, we love ICT. And I was like, well, why do you love ICT? I think he's a horrible trader. I don't think it's net profitable. And they said, exactly. They like literally, I've been told from firms, they love ICT because it causes so many people to blow out because it's making them money. It is directly improving their profits as a sim-funded firm, because that's why they like it, because for them it's effectively free fucking money. So keep that in mind. The fact that we're hearing this directly from them, and I guess whether you want to believe me or if you don't, like, I don't care, that's your prerogative. I am telling you the truth. Sim-funded firms love ICT because it makes them so much money, because so many of their traders are blowing out. Yeah, every once in a while, certain ones will go on a lucky run. That's possible. There is variance in this game, but they are massively net ahead because of ICT. Now you get it. If there's actual stacks showing their system is wrong, that's what it is. Just seemed like you talk trash every other trader on here. I mean, I'll talk trash on people who are net losing traders and don't own up to it. If someone is a net losing trader and they're being honest and earnest about it and saying, hey, here's my success, here's my failure, I think that is transparent. I let you guys know my winning trades. I let you guys know my losing trades. I attempt to do the same thing. Am I a perfect trader? No, I make mistakes. I lose money sometimes. I also make money sometimes. One commonality I see a lot in this like guru furu bullshit is fuck.
Order filled.
Hang on.
Order submitted.
One commonality I see in this guru furu bullshit is this idea of people like to market it that they're never wrong and they're never losing money, and day in and day out they're making money. They never take losing trades intraday, and it's all fake. That is 100% without a doubt just a creation within the digital space meant for marketing. No one is that good. The best traders in the world, they have losing periods, whether it's a day, a week, a month, a quarter. It's just the game of trading. And I guess on a personal note, I just get so fucking sick and tired of people lying about it. Like it's just so stupid. It just be honest. The best traders in the world lose. It's okay to lose. And these people who are net losing traders, like I know they're trading, not all of them, but some of them, I've seen the reports from their communities and stuff. They're net losing traders, but they just won't admit it because it hurts their marketing tactic. And I need to make some decisions here. I need to make some decisions. Mag 7 took a little bit of a hit. S&P 500 took a little bit of a hit. Trace, where are we at? We are holding above 800. We're right at yesterday's high. Let's go to, I guess the 1 minute is a bit more appropriate. It's a bit better. What are we doing? What are we doing? Some put buying stepped in a little bit there. Maybe they're trying to fade it back down to 800. A little bit of calls being realized at like 1037. Let's see. 70. Whoa. My screens are freaking out a little bit. What is this high? This high is 78. 78. We're running into a little bit of a wall here at the high value on the SPY. The Qs still have some distance to go, 613, 50-ish, 60-ish. So that's about a good $1.50 above where we are right now.
Order filled. Order submitted.
What was that fill? That fill was at 81, risking 69. LOL. LOL. Oh, brother. Is that one going to get tagged? Is that one going to get tagged? I took a long at 81, 82. My risk is the recent low on NQ. I'm looking for maybe a bit of a lucky dip buy. Perhaps, perchance. I'm watching the SPY battle it out here. I was waiting for a little bit of a pullback, granted not much of one, which is why I'm trying to be careful. Trying to be very, very, very careful. Oh, brother. Oh, brother, oh, mother. Oh, mother, oh, brother. All right, let's zoom in. What are we looking at? Bullish. Oh, actually a nice reversal on the 4 hour here. Let's do this. This is the wrong one. Where did I lose one of my pages? Okay, I'm missing a page here. Missing a page. I don't know how I got out of that. 5 minute is bullish. 30-minute Orbo breakout. I like that. 10-minute 84. What was this high? The high was 407. We'll see. We'll see. What do we have? Mag 7 going flat. S&P 500 actually taking a bit of a dive right here. So some call selling, some put buying. I'm almost wondering if they're trying to retag. I wonder if they're trying to retag 6,800. Do I want to cut this? I might need to. I'm watching it closely. I'm not trying to give it that much room. Not trying to give it that much room. Yeah, I'm watching that right there. We don't really need this line. Here's a look at the flow. Mag 7 is holding, SPY, some call selling, and now some put buying. Curious. Very curious. Wow, that was looking pretty good, giving some back. I'm hoping that this is just like a momentary pullback type of a situation. But that call selling has not really quite shown signs of stopping, and some put buying. So we're adding negative delta, removing some positive delta. I'm kind of looking for this wave of trading starting at roughly 1038 to chill. To chill. Google's looking good. Nvidia. Did Apple ever? Apple's trying to climb back, but it's still one of the rare red ones today. Kind of interesting. All right, what is that? 64 is the low here. Let me set an alert at that breakdown, and then a nice reversal alert if you're trading NQ would be it recapturing 87. So it gets a little bit questionable below 64, though still bullish, but it just means that this downward trend is not currently stopped. And the potential reversal on the 1 minute time frame at least would be taking out like somewhere between 85 and 90. And then obviously you have that psychological target right above it at 400. I'm watching 90 up here. Come on, baby. Can we get this reversal? I want to see it take out 87 and then tag 25,400. It just keeps running into a wall right here. Jeez. There's right here, you could just see all these guys. They're moving it around quickly. Remember, if it's above, those are sitting sell orders. And this guy is just, I'm assuming it's the same person because it's roughly the same size. I guess I'm not definitively sure about that, but they just keep bouncing it around. Did they disappear? Are they going to just... Yeah, so they're just below 400. Once again, this is the NQ contract. I did roll. If you haven't rolled yet, you should probably roll to the next contract. You should get onto the March contract of 2026. It's also the H contract if you need the code. If you're still on the NQZ for 2025, it's definitely time for you to roll. That. But whatever this is, that they just keep moving it. Look at. You can see in the past that they just keep moving it all over. They just dropped it for a second to 80, and now it's not even on. It's a lot of 100. That order's 100 shares. I'm very curious what's going on there. Very curious. At this point, I would happily take the recapture of 75.80. I'm kind of moving it down by 10 points, but this is not what I really want to see. We're just getting that slow bleed. The slow bleed. Oh, a little bit of a bounce there. This player, it's about 100 contracts, so they didn't. I don't know what's going on. I don't know if this is a right there. 600 at 410. Holy cow. That's a chunk of trades right there. 617 contracts, sitting sell order at 25,410. That's a big order. It's about 50 points above where we are right now. Just because it's there, it doesn't mean they necessarily have to hold it there. Of course, they could add to it. They could pull it. They could move it. It's just a sitting order for right now. But when you get above 100 contracts, that's kind of noteworthy. 600 contracts, that's size, folks. That is some size. All right. Let's see if it can even test 400. Let's see if it could test 400. Mag 7. Oop, everything's frozen for me. Sorry. I don't know what's going on with my Chrome right now. It's frozen. I guess we could watch this. All right, we did tag 80. I'm still seeing kind of a breakout at 87. We just got knocked to 75. I'm definitely tracking that large order. 83. My Chrome is back to working. Smacked. Oh, how do I want to play this? I'm getting some... I really want to see it above 87, and we're currently at 76, so I need another like 10 points. Potential little higher low here. You could kind of watch, if you're watching the cues, you could look for 612.28. You could watch 612.66. Somewhere in there would just kind of confirm this as the higher low. Seeing a little bit of life in Apple and NVIDIA. The Mag 7's going flat, holding. The S&P 500 is doing what? A little bit of a reversal, but starting to get smacked a bit again right now. Not the biggest fan of that. I want to see that push up to, really what I want to see is that test of whoever that big seller is, the 600 contracts. That's what I want to see. I want to see that person tested right here. 617 contracts. That's a lot of contracts. It is up at 410, 25,410. So it's a good distance above us right now. I mean, we're talking 40 plus points at the moment. But things can change. Things can definitely change. We'll find out. Wow, that's a lot. I mean, for any of you who have ever traded an NQ contract, you can recognize that 600. Like when you start trading 5 or 10, you're like, God, good luck. Hopefully you know what you're doing. But by the time you're talking about 600, I don't think my heart would even be functioning if I was trading that much size. I don't know if my heart would be functioning. All right, we took out one guy. Next one's at 95. Pretty much they're front running 400, and then from there we're talking, dude, every time it starts to climb up, it's just getting smacked. Fuck. Look at that. Climb, climb, climb. Nope. Volume hitting the tape, just aggressively selling. Kind of just like awkwardly in this purgatory, I suppose. Awkwardly in this purgatory. Well, for now, and of course, I just cannot reiterate enough that this trade's allowed to move, but for this moment, it is at 410. So watch that on NQ. SPY still getting hit, but MQ just picked up. Interesting. Well, now it's getting hit again. Jesus. I thought it was showing signs of recovery, and technically we did wick above, but oh, this is starting to move a little bit more rapidly. A lot of trades are starting to hit the tape. A lot of trades. Something's going on. Someone's trading. Some sizes hitting the tape as we speak. Oh, right there. That's why. Someone bought puts and sold calls. It seems very specific to the S&P 500 index because the Mag 7 actually hit a fresh high. So we're seeing a little, basically, I think the market's going to take off when we see this trend stop. Starting at 1039, the SPY started to take a hit. The Delta started to drop. Price is holding on decently well, especially given the size of the Delta movement. We've gone from positive 1.4 billion to negative 1.1, a swing of 2.5 billion. So considering the Delta drop, the Delta notional value dropped by 2.5 billion, and price has only gone from 815 to 806. It's dropped 9 points. So I think actually price is holding on well. It's just a question of like, how long can it possibly hold on this well? I would love for it to turn like now, but it's just kind of waiting. I already have a long position, as you guys know. In retrospect, I wish I waited for this to stop. I thought in this choppiness here, it was stopping. So that's when I went long. Unfortunately, the markets had other plans for me, and we keep going to the downside. Yeah, I thought that choppiness I'd be saved with. Oh, come on. I just need that to stop. I mean, because Mag 7's looking strong. It's just, we have to fucking wait, unfortunately. Unfortunately, we're in a bit of a wait period. But it happens. I want to see a reversal on any of these highs on this 5 minute, taking out any of these last three highs, and I'd feel a lot more confident about it. But alas, you just have to wait for this. Like, that's quite the turn from 1021 to 1039. We ripped from 1039 until now. We are just getting hit. Well, while we're waiting for this to eventually stop, I guess a reminder that we are doing a Payday Friday. We are giving away 5 Apex accounts. Code Goonie will get you 80% off. We're giving away 5 funded futures accounts. Code Goonie will get you 50% off. Buy one, get one. And on Vanquish, 50% off and also a free reset. Code Goonie on Vanquish. This is for sim to funded options trading. This is for futures trading. This is for futures trading. So we're giving away 15 of these, 5 Apex, 5 funded futures, and 5 Vanquish as well. And then on top of that, obviously, we are doing a race, because that's always the fun stuff. Dude, lot of volume hitting. Lot of volume hitting here. All of a sudden, this is becoming as boring as could fucking possibly be. It's getting real boring here. But it's like slowly grinding lower. I'm just waiting for this grind to ideally fucking stop. How long are we just going to grind sideways? The momentum is still favoring the bulls. Honestly, I think we're just waiting for this trade to stop. Whatever's getting hit on the market right now, I think we just have, oh, whoa, someone's really, oh, so this is a whole new trade. So the 600 is still up here at 410, but now there's 500 here at 380. That is a new guy. Wow. A sitting pending order. You don't see that often. Well, I guess at this point, we're waiting to see if this scares the market and we sell from there, or is the market so bullish that it just absorbs all that sell side liquidity and gives us this shot at 400 plus. Dude, it ran into that wall. Wow. To see sitting order for 500 and for 600. I'm sure it's happened before, but not that I recall. Not that I recall. Wow. Kind of nuts. Well, watch 480. Might as well mark it out and then understand that apparently there's a whole nother chunk all the way up here at 410. Look, that's just, I'm dumbfounded by the size of these trades. 488 and 614. I wonder if they're actually going to get filled or if they're going to pull it if we get close. We're not that far away. We're 15 points away. Right here, 644, 645. 86. So if we take this out and punch a little bit higher, that's where I would be pretty confident of this bullish continuation to the upside. So I would want to take out 380 because it's this big node. And then from a technical perspective, 86 is kind of a recent high on the 5 and 10 minutes. So I want to see 80, or maybe it's 87, whatever it is. I want to see 80. I guess put it this way. By the time we get to the upper 80s, I'm feeling pretty good that we're testing this 410 dude. But that's a big if, because right now we're still seeing quite a bit of pressure on the S&P 500 side of things. But this is definitely the interesting watch right here. Is the person going to pull the order? Are they going to add to the order? Does it get partially filled? Does it get fully filled? But right now it's a clear ceiling that is being set on top of us. A clear ceiling that is being set on top of us. 73 is a wick high on the 1 minute. We're just grinding lower, dude. Like, it's just this ugly, painful grind to the downside ever since that peak at 10. Well, okay, maybe we're starting to finally see a bottoming formation. You can see pop, 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 drop, drop, drop. So as long as this doesn't like all of a sudden pause and then keep going down, this is the flow for the S&P 500. If we can actually bottom here and even better than that, start to curl up, then I'd be feeling good. The Mag 7 is still looking decently good. We'll see. We'll see. I really thought something was going to happen, so I kind of feel bad we didn't do the race already, because this would have been the perfect grind of nothingness to do the race in. But I just really thought something was going to be happening, because we saw all this movement. We saw all this movement. SPY is even starting to pick up here. I suppose maybe. I mean, it's hard at this exact moment to call this a higher low, because we haven't pushed back up quite yet. Actually seeing some relative weakness here in the Qs. NVIDIA taking a hit over the past 10 minutes, but Apple may be popping up. We did have that trend line, so you don't need that anymore. You can watch something like this. I mean, this is getting like really nitty gritty about it, but I guess I'm just trying to give some sort of structure to watch. Basically, I'm watching this last low on the SPY, hoping it can hold as we maybe curl up, but you'd want it to continue to keep curling. And then the Mag 7 is looking good, but price isn't doing exactly what you would want it to. So you kind of want NVIDIA to break, I don't know, the low 176s here. A little bit of a pop. Hang on. All right. That person is seemingly not pulling their order. Let's see what the Battle of 80 has in store for us. I know we're already going over on time. Don't worry. We're still doing Payday Friday. It is a Friday. We all are celebrating. I just figure we're also here for trading, so you might want to watch this very important test. Very important test. All right. They pulled it. They just pulled it. Not there anymore. Did they move it up? Did they move it at all? Well, they moved it. We can see it literally just disappeared right before 1104. Looks like a bit of a market order. So maybe they marketed out of some. Someone hit the market a little hard there, but not to the tune of 500 contracts. But they did pull that order. It did not get filled, at least not fully. They might have marketed it a bit after 400. We're testing that trend line right now on the Qs, I suppose, right here. This trend line's a little lame, so let's get rid of these trend lines. Let's just set an alert for an intraday breakout, for a new high, and also for an intraday breakdown. Piper also fired on this little mini recovery. So let me give that to everyone in the Discord. What is today? The 18th. The 18th. NQ getting some sort of, we're taking out that 87 level. All right, if you're in the Discord, Piper just fired. Oh, where are we on this? 813. That 410 player is still there, but the person who had the 500 didn't add to it. It's still the 600 that we've been seeing that whole time. Some people are stepping in at 400 a little bit, but still the clear target is 410. Well, let's see if that low can hold. Where did we go today? All right, we're throwing in an order there. Patience, patience, patience. Patience, patience, patience. My order did not get filled. That's odd. Still didn't get a fill. I think I have to wait. I can't really chase it that much more. That feels like it would be silly. Whatever. If my order gets filled, it gets filled. Trying to sell a little bit of premium before we ideally fight this jabroni over here at 410. He's still there. A little bit of a battle at 400. I'm watching this guy at 410. All right. It looks like I got my fill. Looks like I got my fill. Positions. If you're in the Discord, I am screenshotting it right now. We're putting it in thick trades. Okay, that's in there. If you're in the Discord, Piper fired, and I took kind of an aggressive trade. It's not exactly 1-for-1, but it's just all I could get a fill on for right now. So that is what it is. I'm still long on NQ, and I'm trying to figure that one out. I'm still trying to figure out what the fuck is going on, because we're running into this wall at 400, which is not giving me the best of vibes, if I'm being completely honest. But it just feels like this guy's been sitting here forever. You know what we should do is be a little bit more logical. Track Mag 7 flow is still strong. Momentum bullish, bullish, bullish. Even breaking out bullish there. I like that. I like that. Natural target could be 511 on ES. That's all looking bullish. NQ just did something. We're going for 400. 90.
Order submitted.
We did something. There's buyers at 75, sellers at 410. So the old battle, 375 versus 410. I'll move myself over here so you can see it a bit better. But this is this is huge. This is very fascinating to me. The longer you use Bookmap, you're going to realize you don't really commonly see these types of orders. And then there's a chunk trying to buy at 75, 300. Dude, people are trading with size today. On this beautiful Friday, they are trading with size. This beautiful, beautiful Friday. Come on, let's rip it up to 400. What are we doing? $410. That's this dude. He's still there. What do you think? Is he going to pull the order, or is he going to keep the order? technically there's two. There's a big order up at 410 and a big order down at 375. Do you guys think this guy has the balls to hold and like let that get filled, or is he going to get blown out? He's still there. He didn't blink yet. He didn't blink yet. Who's going to blink first? Who's going to blink first? Who's it going to be? Who's it going to be? Getting filled? He's not. Wow. They ate up only 20. He did not pull. That's a legit order. Holy cow. About 20 to maybe 50 got filled on that little pop right there, but no. And now they're coming back for it. That guy's getting out of size. And filled. And filled. They overshot it a little bit. I'm trying to dump one of mine at 15. The other one's already at break even. Oh, shit. Was I a little bit too greedy with it? Was I a little bit too greedy with it? I'm giving it a second. Wow. Just got that fill and then got smashed. Buyer's still down there at 75. Having a tough time holding that 400 rung, though. Really having a tough time holding that 400 rung. Oh, okay. Let me think. I need to be reasonable about this. I held it through all this dog shit. Obviously, I don't want to take on the risk of two. We have a stop order somewhat in profit, so it's at 89. Is it just going to come for me? I might have gotten unlucky. I really thought...
Order filled.
I really thought it was going to bust through that player. I thought it was going to overshoot it actually by like 20 points just by seeing all of that size. I thought, oh, dude, if they take that out, that's like a legit play. Where was that order that I just got filled at? 89. Okay, so that's actually my break even. I need to mark this out on this chart. 89. I'm giving it a second to breathe. I unloaded one at break even, obviously for risk management purposes. We know there's players at 75. They seemingly lightened up on that order. It was more aggressive before, but I just want to see if it's just going to quickly bounce off of 75 here. Fuck. I'm not the happiest with how I played that. I should have unloaded one at that with that big player and probably set the other to break even. I just really thought my reasoning was if it takes that dude out, like we're going. I thought we could have seen one of those like weird, like in a minute bar, you pop whatever, 20, 30 points. I thought that's what was going to happen when we took that player out. Obviously, my anticipation was wrong, and I guess that's just a lesson learned for me. A lesson learned for me. C'est la vie, you know? C'est la vie. Tomorrow is the first Saturday. You get it. S&P 500 did pump, quickly gave some back on that drop there, and Mag 7 is running away. Remarking out the intraday highs. Q's, I don't know what the fuck alert that was, but I got some sort of an alert. Shit, I'm not happy with how I did that one, folks. Not happy in the slightest. I definitely could have played that a bit better. But whatever, that's a learning lesson, honestly. I feel like I haven't had the most experience like in real time seeing such large orders. And in the past, when I've seen them, when I saw the players get blown out, I've seen jolts. So that was kind of like my anticipation of what to expect. And in reality, I thought I was undershooting it. I was like, oh, they're at 410. If I'm really anticipating a 20-point pop, I should be able to get 5 more points. I thought I was actually being conservative about it. But in this one, maybe the sign, and this is me just thinking out loud, maybe the sign that it's not that clear. It was when the player clearly kept it. We ran up, it filled. We ran up, it was getting filled. Like it took a bit for it to get filled. And then it was only an overshoot of like 2 points. And then it kind of got smacked. So I guess I just don't have the most practice with that type of a situation because the situations just don't arise that often. So learning lesson for me. And like I said, I protected myself. I was long 2 contracts. I got knocked out of 1 for break even. And it just is what it is. And now it's already bouncing back in my favor. I'm not seeing any of these large orders anymore. Yeah, I could have played it better. And that's why we don't predict, we react. Well, exactly. Like I had this idea of what I wanted to happen, but once again, in terms of reacting, that's why I move a stop to break even because like, whatever, I admit that you could be wrong on shit. So just on the off chance that I was wrong and I was wrong, I lowered my risk by getting out of break even on 1. And then the other one, I'm currently still in 37. And actually my break even is 89. It's this line right here. So I want to move my stop to break even on this one and see if I can ride this up. So roughly where that cursor or that line is, I want to move my stop to that because that's me protecting it. But obviously at this point, I do that on the break of 12, which is currently the intraday high. So when we push 410, 412, 415, really, if we can hold 400, I'll happily do it. It's just, I know people are going to be reacting to this level. Oh, how do I want to do it? How do I want to do it? What was that risk? I do like this one better, actually, for right now. Things are just getting so whippy at this 400 because I think a lot of big players are, in one way or another, involved in this level. In one way or another, involved in that level. But to be clear, I got out of 1 at break even, lowered my risk. I was going for the pop. I just didn't get lucky with the pop. And as one of the viewers was right to point out, like, we don't predict, we react. That was like, I mean, I thought I had this idea of what was going to happen, but I wasn't holding that to be so like pure of an idea that it had to be right, that I protected myself by moving one of the stops to break even. I still like the overall trend. I just cut my risk in half by dumping one of those at break even, and the other one right here, this break even, you can see the sell at 89. So this horizontal blue line is something I very much care about, because now instead of looking at the break of 412, now I can move my stop up on the break of 404, this recent high. And this really isn't, there's no special level at 440. I just arbitrarily put it up there. I think it auto set it because that was like 50 points from the entry or something. I think mine's auto set like that. So that's not, I just want to be clear. I don't see anything special going on at 440. If it rips at 440, I'll be stoked. But remember, I care much more about getting my stop up to break even than anything else. Come on, just get going. Just get going. Get going, get going, get going, get going. Take out 404. Let's see 405. Do I hear 405? It's having a tough time at 400. So I like that my entry is below 400 just because in the event of a break, I could theoretically be protected at buyers at that level. The issue is we just haven't gotten that break yet. So I'm still kind of like awkwardly waiting to know if that's going to happen. And right now, it's becoming quite the grind. Folks, I know we're really delayed on it, but it's just because I happen to be in a live position. We're still doing the Payday Friday. You have tons of time. All you have to do is like, retweet, and follow. We're giving away 15 prop accounts, 5 Apex, 5 FFN, 5 Vanquish. Use the code Goonie on all of them to get whatever their current deals are. And we're going to be doing that on top of a marble race. Hopefully we're just doing it in celebration of me getting a fill, or at least getting my stop to break even to protect myself here. All right. Come on. Come on, come on, come on, come on, come on. Come on, come on, come on, come on, come on. See, like it just keeps wicking above. It just keeps wicking above. It's just having a real tough time on this 400, but we're at this trend line. I'm liking it. It's going my way. I think I just need a bit more patience. A bit more patience. Come on. Get that follow through. Don't be a double top. Don't be a double top. You could do it. You could do it. Fuck. It's just so, like, it's just getting stuck in the mud right here. Right at 400. Well, no. Sub 400. Like, why couldn't it be doing this battle at like 410, 415, 420? That would make my life so much easier. Now it's actually just got hit 15 points, 20 points. See how it just wicked up? It just like wasn't enough for me to move my wrist. Like, cause we barely, like it just got smacked. Fuck. How do I want to handle this? I need to think and I need to do it quickly. The real question, hang on, let's look at the options flow over here. Mag 7 is still showing quite a bit of strength. S&P 500 is flat, so at least it stopped selling, but it's not necessarily curling up anymore. Here's the 10-minute on this, so bullish, but maybe just this range-bound consolidation would not be good news if it breaks to the south side. But it would be really good news if we take out that high we just made of like 404, 405. We're having a tough time seemingly on the S&P 500 at the high from yesterday. We're just chilling at 812. So we are holding 800. On a break and follow through, I'd be looking at 25. Yeah. So see how, yeah, what is this structure? Call credit spread structured by 20 by 25. So I'd be looking somewhere between 20 and 25, which happens to align with the high from 2 trading sessions ago. And also 25 here is like the protection side of the call credit spread. So it's a big if, but if we break that, that's what I'm looking for, a push up into here. With, for me on my NQ play, that would be more than enough to get the fill that I need. More than enough. It's just a question, is that coming now, or is it going to be like earlier today where we have some sort of gigantic dip before that happens? Time will tell, but it's just this stupid fucking range. Mag 7 is still looking good. S&P 500 did take a little bit of a hit. That's bullish. That's bullish. Orbo's all broke to the upside. The 4 hours actually now also bullish. Bullish. I'm not liking how choppy this is. A clear lack of follow through. The NQ really struggling at 400. Really struggling at 400. But I don't know if it just needs a bit of patience here or like what we're doing. What we're doing. That looks fine. Let's go to the 5-minute on all this good stuff. Yeah, we're just chilling right at that high. So we're pinned. We just kind of, I guess, have to wait. Daily chart is looking like a recovery. As I said this morning and also in the update video yesterday, this, if we, especially if we close up here, but if we can close above 6819, the high, basically the high from yesterday and the day before, if we can get and close up here, this is just officially a higher low. And if you ask me, it means the Santa Claus rally is still intact. So maybe in the short term, this is just a wee bit of a pullback, but I'm thinking maybe just with a bit of patience, we might have a real shot to pop a bit higher. If we do, obviously I'm looking for it to crack through 25 and then from there 50, but understand the higher up we go, the harder the fight's going to be, because that's quite a bit of positive gamma between 20, 30, 35. Like, so I'm kind of, I'm really liking this target at 25, basically. But we'll see. All right, let's get ready with this Payday Friday. So let me reload this and oops. All you really have to do is like, retweet, and follow. It's my pinned comment. It's pinned to the top of chat. It's in the description of the video. You're going to have like 30 seconds to do it. All you have to do is what these other 186 people have figured out. Like, retweet, and follow, and that's how you get entered. As you are doing that, I'll give you a couple X picker. Let's get this up and running. Close pop-up. Let's go to this tweet right there. All right, there's the tweet. Like, retweet, and follow. Matt must follow. Do I do Matt _Kohrs or do I do at Matt _Kohrs? I forget. Must follow. I think it's at Matt _Kohrs. Let's see if that works. Like, retweet, and follow. So I'm going for 15 because we are giving away 15 of these accounts. And what you need to know right here is basically every other one will just switch it. So if you're the first one on the list, it's Apex. If you're the second one, if it's at FFN. If you're the third one, it's Vanquish. The fourth one, back to Apex. So we're just going to keep going so we could do the drawing all at once. All right, ladies and gentlemen, whoa. We're just pushing a bit lower there. It's not like the end of the world, but we're just kind of range bound. We kind of got up, a little bit of an overshoot double top type of a situation. Well, that sucks. It's bleeding off a little bit right here. Fuck. We're pushing the bottom of this range. Is it going to be a fake out? SPY is taking a bit of a hit. Damn, we saw this sell off and I was like, okay, we're waiting for the recovery. Hopefully it doesn't skew back down to the south side. And that's what happened. We have more call selling. Longer duration call selling. Maybe they're putting in a ceiling. Maybe some midday shenanigans. I don't know. Your guess is as good as mine, but obviously I'm very, very happy. I got out of one. I'm not happy with how I played that. We saw that giant player at 410. What I should have done was sell one at 410. The other one's at break even. Now having the data we do, the other one would have been knocked out at break even. So I would have made 20 points. I would have been up $400. And granted, that's not necessarily what I was targeting on the day. I was targeting at least $1,000. But right now, compared to where I would have been, that would have been far better off of a situation. So, I mean, it just is what it is. Fuck. It is what it is. So I'm still long that one. I do have risk. It's kind of far risk just because this momentum hasn't been going anywhere. But we even just got a flow alert here on the SPY. So hopefully this is a little bit of a fake out. A little bit of a fake out. If it is a fake out, should I be playing it? That's the real question. If this is a fake out, if we start to pop back up quickly, the question is, should I be going long? Should I be adding to this position? Like I said, I have one NQ. I'm thinking about adding another, but am I just seeing something that's not there? Am I a little bit too confident in this bullish reversal, or is it a good risk reward play? We're right at the 50.
Order filled. Order submitted.
All right. Oh, brother. What is the math on that? What did I just do? I need to get some stops in right away. I need to get some stops in right away. All right, stop is in. Let's see if my little, I mean, I'm zoomed in, but it's a little bit of a dip buy. I added one, improved my average ever so slightly, and we'll see if this was worth it or not. We'll find out if I'm smart or dumb as a box of rocks. You just never know. You just never, ever know. All right, I think I did this. All right. Well, you had enough time to do it, so let's see who's lucky today and who's not. Ready? Winner, winner, chicken dinner. We're going. Searching. Please wait. All you had to do was like, retweet, and follow. Nice. We got it. It worked. The 15 winners are right here. Right there. Let me screenshot it so I don't lose you guys. Brett, Mike Kimmel, Fuzzy, Javs, Jay Hundo, whatever the name that is, Rob, J. Keith, Lake Lurker, Boule, Elon Muskie, Epic, That F Guy, DJ, and Crazy 420. Those are our 15 winners. It goes Apex, FFN, Vanquish. Apex, FFN, Vanquish. So I will be reaching out to you guys later today. And of course, on top of that, also the winner. But let me just save that because I don't want to lose that. All right, cool. I saved it. We're not losing it. It's also obviously saved on stream here. So we're definitely not losing it. But let me get that. All right, let me get the game going. So congrats on you guys already for winning at least an account, but now there is money up for grabs. Play. There is some moolah up for grabs. This is loading. I guess it's updating, loading, updating, doing whatever it needs to do. It's being itself. Shit. Come on. I'm trying to dump. Remember, okay, so I had 2 contracts at 89. When we popped up, I moved the stop on 1 to break even. That got clocked on the south side. On this drop and potential recovery, I went long another one at 70. I'm trying to now dump that first one back at 89. So basically, I'm doing what I should have done, and both of these are getting out at break even. And then I'll have this new position at 70. So that's, oops. Right. I'm trying to be a little cute with it. I'm as you can see, I'm trying to get out of that first one where I should have gotten out of it. And then I could go back to my proper sizing and whatnot. But you kind of get what I'm attempting to do. You kind of get it. Maybe you do, maybe you don't. All right, let's get in here. Continue race. All right, so we are racing on, the kind of on thin ice. How appropriate for what time of the season it is and what we're doing in the market. Let me go to settings. Nope, that's not right. Discard and exit. Okay, bots. Is it here? Okay, yeah, add names. All right, add 2, 3, 4, 5. All right, so we're at 15. We have Brett. We have Mike Kimmel. We have Fuzzy. We have Jazz, whatever the hell name that is. Jay Hundo. We have what is this name? GRZE. All right, we're leaving it at that. That's a lot of letters, a lot of strange letters. We have Rob L. We have J Keith. We have Lake Lurker. We have Boule. We have Elon Muskie. We have Epic. We have F Guy. We have DJ Trifork. And we have Crazy with a K. All right, 15. Finish. All right, we got those guys. And I think I did this right. Let me minimize this for 1 second because we do need the right song. And I would also just love a quick fill on this so I don't have to stress out of carrying on too much risk. Come on, just give me the fill. I can move my other stop to break even, and then we're just off to the races. I want to dump 1 at break even. This is the play I had from before. I just want to get out of it, move on with my life. It is kind of begging for a trend line breakout for me to do this. Come on, just pop. It's right there. Just give it to me. Make my life easy, please. Please, please, please. Just make my life. Just give me the fill. Just give. There we go. All right, cool. We don't need this anymore. We don't need this anymore. We don't need this anymore. We can move this stop to break even. 71. I'm taking on no risk. 70. 440. 422. 450. Okay. 417. 420. Okay. So we'll do 422. 50. Okay, cool. It's in there. Stops at break even, not losing money. Actually, I should probably move this up like a point just so I'm above the 50. How much? 40. Okay. So no matter what, I believe I should be good because I'll make at least those $50 that I need for it to be not only a trading day, but a profit day. And then on the flip side, if it keeps going another 25-ish points, I should be able to lock in the $1,000. So not my best trading by any means, but it worked out. I mean, I find that you quote unquote get luckier if you're trading with trends. So even though it didn't pan out and I didn't manage it the way I wish I did, it wasn't horrible decision making. It just wasn't top tier. I feel like I could have done better myself. But regardless, I'm now in a position where I'm either locking it in and doing what I need to, and I'm getting my $50 or I'm getting my $1,000 per account. So we'll see how this one plays out. And in the meantime, let's celebrate by doing a bit of a race. Mr. Producer, what song do you want us listening to today? Can you send that to me on Discord? Right here. Got it. Hang on. Oh, by the way, this is Tendies and Tunes. The description's in the video, but right here, just go to Tendies and Tunes. All this trading music, it is free for you guys to use, to listen to whatever. It's a channel. It's up there. So all that awesome music that Chaos makes, everything you're hearing in the mornings, it is there for all of you folks. So take advantage of it. Like I said, Tendies and Tunes, Chaos is putting it in chat right now. So my final question for all of you is, who's going to win? My final question for all of you is who's going to win? This ain't no normal Payday Friday where we used to do 5. It ain't no normal Payday Friday where we used to do 10. This is Payday Friday where we are doing 15 racers, 15 prop accounts, and 15 people who know eternal bragging rights are on the line. Folks, yes, are they winning a bunch of cold hard cash for being the victor of this race? Of course. But what's more important than that is being forever in the Hall of Fame of the Goonie community for being one of the fastest racers in all of the land. Who do you think's been trading? Who do you think has been ready for this since day one? Who do you think is ready to let this rip? Who are you voting for? We have 15 people who have done a lot to get to this point in their racing career, but now we're about to find out who really has it in them, who really, really has it in them. All right, cast your votes, but we are off in 3, 2, 1. All right, cast your votes, cast your votes. Fuzzy gets the first job taking the right path, Boule taking the left path, and we are all on the slippery, twisty turvies. And crazy, there's Rob. Fuzzy leading the race, but taken over by Rob. Jay Hundo now in second. Rob, where you going? Jay Hundo, Rob, Fuzzy. 1, 2, 3 in that order. Jay Hundo taking the right path. Fuzzy following. Rob stuck. Jay Hundo quickly running away with this race, followed by DJ and Fuzzy. Fuzzy refusing to quit. Grease and Jay Keith are also in hot pursuit. Let's hop forward to see our Leafs race leader. There's DJ, there's Fuzzy, there's Jay Keith. This is honestly anyone's race, folks. This is anyone's race. Oh, Jay Keith. Dodging all the obstacles. I like it. I like it. Jay Keith, are you going to hold? DJ, Fuzzy, Jazz. So DJ almost died but saved himself. Brett is catching up. Who's getting out of this? Folks, this is anyone's race. Oh, I'm getting Jazz. Brett died. Brett, it was nice knowing you. Elon Muskie now in second. All right, who's gonna? Wow, Jazz. Looking strong, looking strong. Can anyone catch up? Elon Musk is in second, but it's a distant second. We might have a runaway. Everyone got, hang on. There's one more major obstacle. Will Jas get the quick drop? Yes, no, maybe so. DJ's there. DJ coming out of nowhere. DJ sneaking through. That's impressive. That's impressive. Folks, he snagged that gold medal at the last second. He snagged it at the last. What a comeback. Out of nowhere, DJ was always in contention, but Jas getting fifth, not able to get that final drop. That's a race right there, folks. That's a fucking race right there. DJ, name I can't say. J. Keith, Rob, name I can't say. Boule, Mike Kimmel, Elon Musk, Crazy and Epic. And then we also do have 5 deaths, unfortunately. DJ, well, first of all, if you competed at all, I'll be reaching out to you. But DJ, I will specifically be reaching out to you to get your PayPal email to send you that cold, hard cash. But we do have Fuzzy, RIP, brother. R.I.P. brother. It happens. Hang on, let me kill that for a second. During that race, hang on, how's the trade looking? I'm at break even. We're looking at money, but the crazy thing, and this is a little bit of breaking news, my phone started to act as a vibrator. And I'm talking about one of those good vibrators, because look at what I just got. 3 minutes ago, Payout approved $2,000, and there is 15 of those bad mama jammas. Literally, within the past 2 minutes, your boy just made $30,000. So if during that race you were thinking to yourself, why does Matt have such a glow about him? What's going on in this rate that all of a sudden Matt feels a bit lighter? Matt feels as if he's on cloud 9. What just happened in the last 30 seconds that Matt feels like a renewed man? Well, it's because your boy just got $30,000 in the last 3 minutes. 2K, 15 different accounts, approved. Folks, it was a Christmas miracle, and it got paid. So this day is Payday Friday for many, many, many reasons. And honestly, on top of that, it looks like I might be getting paid elsewhere as well. We're really struggling at 400. Do I want to move my stop up? I'm thinking about moving my stop up to like 84. Because that would make me... Okay, I have to ask myself, if this stop gets hit right now, would I be mad? I'd be up about 15 points. That's $300. So I'd make $350 on the day. Guaranteed. I kind of want to take it. It is Payday Friday, and I'm still giving myself a shot at a runaway victory. But the worst case scenario is I make $15. I'm already up 40. I'm up $390 on the day. I have 20 accounts. It's not a bad deal. I'm trying to ask myself, am I actually okay with this? And I feel like I am. The question is just, should I move it down like a point or two? Like, are people targeting a certain level? Because it does look like they're targeting 78, 79. Dude, we're back to big orders above. Big orders at 415, big orders at 420. Market's getting a little scared. You know, the more I think about it, I don't think I'd be that upset if it gets hit. It's green. I could call it a good day. It's a green victory day. I got approved on payouts. It feels like it's good money. And there's also the off chance that, what if I do get clocked here and it comes down and knocks me out for break even anyway? At least this is guaranteeing my 300. I think I'm going to leave it. I do. I think I'm going to follow what Icarus tells me to do on the day. And I think I'm going to, if it breaks and rips 400, your boy might get lucky. But on the flip side, if I'm not so lucky, if it drops another 10 points, I'm making $350 on the day per account. I have 20 accounts. That's about $6K on the day. We already secured 30,000 already in transit to my bank account. We're here celebrating pay. The more I think about it, the more I talk about it, I actually really like this. I think this is the smartest decision. I'm guaranteeing myself a good, profitable day. This will be my last trade of the day. I think we're looking good. Whatever happens, happens. It is very close to knocking me out, as in the likelihood of this happening is high. But if there's kind of an out of nowhere break of 400, I might get lucky here. I'm trying to protect myself here at 85. If it snaps 400 and goes, I might be golden. But anyway, that was fun. That was a fun Payday Friday. It was a good race. We got some exciting news during said race. I like it. Remove that. I'm just cleaning up some of my charts over here. Thus far, shaping up to be a good day. Ooh, this looks like it's going to get tagged. If I wanted to, had I traded better, I could probably already be up more and give this more of a leeway to work. I mean, but it's getting close. I'm within 5 points of getting tagged here, but it is what it is. I don't even necessarily know if I deserve to be taking on more risk today, because I just haven't been trading the best. That this trade over here, I'm a little angry at myself. I think I'm going to take that lesson moving forward. And hell, I might still get lucky, but I would say I give myself a 20% chance that it doesn't revert here and it keeps going, and an 80% chance that there's a small hiccup and it just tags me out. But I'm trying to envision the worst case scenario. If it tags me out, I make $300. So I'm up 300 on the day. That's $6K. I'm not going to complain about it. LA. Matt, Seattle or LA in tonight's game? I'm going LA for sure. That's a Matt Kohrs guarantee. That right there, that's a Matt Kohrs guarantee. All right, let's watch that. I don't necessarily need this anymore. Let's watch this. I don't necessarily need this anymore. Oh, is it going to tag me? It almost tagged me. We're getting dangerously close. We're French kissing our cousin. We got real close right there. Within a point. Is your boy about to pull off a lucky reversal? It came as low as 84.75 and my fill's at 84. Within 1 point. Your boy is flirting with danger. And look at that, a quick 10-point bounce. Look at that, a quick little sweep, and then it bounces anyway. We're going to find out. We're going to be finding out. Matt, one tick Kohrs. We'll see. It might be my lucky day. Might be my super unlucky day. Dude, if it gets this close to knocking me out and then rips anyway, it's a Payday Friday for the ages. This is why I love trading on Fridays with all of you folks, because you just never know what's going to happen. Anything can happen. We might as well call it anything can happen Friday. Is it just coming for me now? Is it just getting way too smacked at 400? Dude, it is having the worst time at 400 today as the S&P 500 is valiantly battling it out. I don't really need that anymore. At the high from yesterday, right here, just at this 812 level. We'll see. It's really just range bound. We had this nice pump. That was a beautiful trade, and now we're just caught sideways. I'm attempting to try to play the breakout, but who knows if it's actually going to happen or not. The Mag 7 flow is still very strong, favoring the bulls. The SPY tried to recover during Payday Friday, that little marble race there, but now it's getting clocked. It's just more call selling. That's been the story of the day. Is just the call selling has just stopped all of our nice upward momentum. It's not really put dominated. It's just all these calls. It's just net. I'm about to get tagged.
Order filled.
Just got tagged. All right, let me pull that order.
Order canceled.
Orders. Cancel all orders. Hey, I gave it a legit fight today, folks. I did what I could. 300 per account. I was going for 1,000. It did end up wicking me out. Literally perfectly wicked me out, and it's already bounced 10 points from there. Fuck. If I left that stop at break even, I'd still be fine. Literally perfect. You saw my stop was at 84. Tags me at 84. That's a bummer. That's a bummer, but whatever. 300 net per account. I'm not going to complain about it. It's good for a Payday Friday. I'm happy with it for a Payday Friday. It just feels as if I'm fighting too much of that call selling. And I went from feeling I was going to get absurdly lucky, and then on the triple tap, it tagged me out. I'd already be up another 16 points. I'd be up another $300. Fuck, dude. Literally wicked me out to the tick perfectly. Sometimes that's trading. Sometimes that is trading. Like I said, prepare for the worst. Don't assume it's going to magically go in your way. It just is what it is. Sometimes that be trading. Sometimes it's just how it goes. All right, folks. Well, before I let you go, thank you for participating in Payday Friday. Goonie will work on Apex, Funded Futures Network, and Vanquish. All of them are running great deals right now. Some people are asking about SpotGam. It's in the description of the video. You could use that link. You'll get 80% off with that code Kohrs or just using that link. With respect to the market, we are clearly range bound, but range bound favoring the bulls. 5-minute, 10-minute, 30-minute, 4-hour all bullish. 5-minute, 10-minute, 30-minute, 4-hour all bullish. Did I get wicked out at the bottom? I certainly did. And most likely this is, now that it wicked me out, it's going to be the perfect opportunity for you to rip it. So if you were fading me, if you're like, no, I'm going to go long as soon as Matt gets knocked out of his long, dude, works every time. You literally would have bottom ticked this. You could have already had your stop to break even and you could let this puppy fly. But I do appreciate you guys being here for Payday Friday. Thank you so much. Enjoy your weekend. Whatever your trading plan is today or for Friday number 2 tomorrow, please be mindful that tomorrow is not just a normal monthly OPEX. It is in fact triple/quadruple witching. We have a PCE inflation report in the morning. In the overnight session, we have monetary policy updates from the Bank of Japan. So there's a lot going on tomorrow in terms of macroeconomic developments, in terms of the natural, I guess, like just decay of these contracts and whatnot. So tomorrow's probably going to be the real last big bang of movement for the remainder of this year. So whatever you do, please respect your... Are you fucking kidding me? I cannot believe it. Wicked out perfectly. 84. Had I done 83.75 and my target was at 20, we would be up and away. I could move. No, dude. No. That's some baloney, dude. That is some capital Bologna, if you ask me. But hey, it is what it is. I can't complain. I got approved for $30,000. So on to the next one, I suppose. Folks, that's what I have for you. I appreciate all the good vibes. Use that code Goonie on Apex, FFN, and also on Vanquish. The links for everything I use is in the description of the video. Other than that, happy Friday. Happy Friday again tomorrow. Happy weekend. And we'll be posting content today, tomorrow, all that good stuff. And we're still going to keep streaming in the first half of next week. So if you're wondering if I'm taking off the entire holiday season, the answer is no. We will be streaming and putting out content in the first half of next week. So this, as of the moment, isn't see you next year. We still have a little bit of time left together. But enjoy your Friday. Thank you so much. I appreciate all the good vibes. I'll catch you guys later. Peace.